Something a little bit more positive. This is where the euro is, 110.98, and I mentioned this only because it is ECB day. We are expecting to see a hike. We've been told almost as much by policymakers that there will be a hike from the ECB, so the focus really does turn to September. What will the parameters for a hike look like? Just how data dependent is the ECB right now? And here's the Brent crude price, 83.48. We were just talking to the CEO of Shell, talking about what they're seeing in China, where they're seeing strength and where they're seeing weakness, and in fact some of that weakness coming in the export-related parts of the business. So that's of interest on the China story. This is what we see on futures then. We would expect to see the CAC futures outperform today, given how underperforming they were yesterday on the back of those LVMH numbers. The luxury sector really under pressure in yesterday's session, so we expect to see a bit of a bounce back there. Elsewhere, we factor in the Fed, we factor in a host of earnings stories. Let's have a look then at the start of the European trading day and see just how that combination of the Fed, the tech earnings story and the wider European earnings story, how that adds up for European equity markets. The Spanish IBEX up by 0.4%. The FTSE 100 fairly flat this morning. We see a continuation of strength coming through on assets that seem to be linked to the China story. So the Australian dollar continues to gain. The euro we've already checked out, but a little bit of weakness in the dollar, leaving room for the euro and the pound to be a little bit firmer this morning. Broadly speaking then, we're quite risk on in terms of the global picture for stocks. We certainly saw that through the Asia session. We see it in US futures looking ahead, and we're seeing it in the European story to some degree at least. We've only got the Spanish IBEX in there for now, but other European markets probably opening in the green as the futures picture dictated. And we're also buying sovereign bonds, so we're seeing those yields coming down a little bit, not too put off by higher iron ore prices of late, as those iron ore prices drop a little this morning. Brent crude up 0.8%. Onto sectors then, and we've had so many corporate earnings stories coming through this morning, and the sector picture looks broadly green, doesn't it? So many of these sectors in positive territory, and we don't necessarily see any standout movers. I can see consumer stocks up by 0.9%. Is that a bounce back on some of those luxury names over in Paris? We'll check out the details on that one. Travel and leisure bouncing from recent weakness as well, up around 0.5%. Interesting that it's the basic resources and energy stocks that go weaker, so perhaps that will lead to London underperforming a little bit. I think this might be the price, this might be the CAC from yesterday, down by 1.4%, but we will look to get an opening price on the French market as soon as we have one. Let's get to the earnings stories then. Sam Onstead joins us from our Markets Today blog to give us his thoughts. Sam, we talked a little about the earnings stories coming through from the car sector, and it's pretty mixed, wasn't it? We'll have more on the car sector in a moment. Talk me through your thoughts on the energy markets, because buybacks seem to be a bit of a big theme there.
Yeah, I have a very significant theme. And I think actually in terms of the earnings today from both Shell and Total, I think they were broadly as expected. So a big drop in profit, almost entirely driven by energy prices coming down over the course of the last year. But as is often the case, when you know that's going to happen, you might well sort of strengthen your buyback. And I think that's what you've seen today from both Shell and Total, and actually also Barclays as well this morning. Yeah,
and let's linger on that, Barclays, for a moment, because we've got numbers out from Barclays. The share's actually a little weaker this morning, down more than 5%. 5.3%, after it seems to be a miss on the investment banking side of things that seems to be driving that. But they were trying to offset that, I suppose, with the buyback.
Yeah, I think, with Barclays, this has been a very, very busy week already so far for UK banks. Barclays is a slightly different beast, to Lloyds and to NatWest. The investment bank is a huge driver for them, and they're investing quite heavily in it too. So that missing expectations is not necessarily what folks would have wanted to see. You actually had a similar result out of BNP Paribas in France this morning. Fixed income trading volume going down more than expected. That for them, they were offsetting that through cost controls.
Okay, let me ask you about the Bank of England story that we touched on a little earlier with Mark. Run us by the news lines coming through there, because I mean we speak to economists fairly often who might raise concerns about the dangers of hiking too fast. Some might have that view. Others will say, no, you've got to be laser focused on inflation, and that's not really a concern. So what are we hearing from this group that advises the Treasury?
Yeah, so what we're hearing from them, as you say, it's an independent group that advises the Treasury. They have some concerns about the speed of hikes and whether they are going to push the UK into a recession that I think they believe to be unnecessary. You know, this is not something that's completely out of the blue. You know, you have heard, you know, some people on one side of the debate would say that that's part of the case. You've also seen, of course, over the course of the last few weeks, the bets on where rates are going to peak have come in a little bit. So it just adds to this sort of swirling debate that we now have for the Bank of England next week.
Okay, swirling debate continues then. Sam, thanks so much. Thanks for joining us. Sam Unstead from our Markets Today blog. Remember, of course, you can get further details on the front page of the Bloomberg UK website. That is at least where you find a link through to the Markets Today blog. You can click through onto it, or you can type TLIV Go onto the Bloomberg terminal. That will also take you to the same location. Now, we've heard from Mercedes-Benz today. Mercedes-Benz has raised its earnings forecast for the year, helped by rising sales for high-end cars and profit growth at its van division. We were speaking earlier on, just with Sam actually, about some of the themes coming through in the earnings story, and he was telling us about how the high-end producers don't seem to be suffering from the same sort of lack of consumer confidence as the lower end, the lower price points within the car sector. And that really does chime with what we were discussing in the luxury space with our colleague Andrea Felsted just yesterday. So on the Mercedes story, the company saying that it now expects industrial free cash flow to be slightly above the last year's level rather than in line with it. You might have thought that guidance might lift the share price a little bit, but actually it's moving lower this morning. So the Mercedes-Benz Group share price is down by 1.3%. We spoke to the CEO of the business about the outlook for the car maker.
We're watching the macroeconomic environment quite carefully, and of course we saw the Fed raise rates again in the United States yesterday, and it's expected that Europe will follow. The Chinese economy, post lifting the restrictions, have not yet gained the momentum that many expected. But with that as a backdrop, the first half of the year has been very solid for us. And of course, our strong products are underpinning that success. And we would like to keep that pace in the second half of this year. That's why we, as a total, raised our guidance, but we're watching the macro environment very closely.
And I want to ask regionally, what are you seeing? What are you seeing in the United States and in Europe right now in the outlook?
United States, of the three major economic regions, up until now, I think it's the economy that's been the most resilient. Then again, it also now has the highest interest rate level. And I gather the goal of the Fed is to slow things down a bit to get the inflation under control. Europe has been behind that. And as I said, on China, I think many people expected that coming out of COVID that it would rapidly go up. That has not yet happened. There's been some signs from the government. They're taking some action, but we will see how that unfolds in the second half of the year.
And do you have any? And what is the optimism on China? Do you have any clarity on what? Because they want to boost car sales. That is part of the action, the stimulus that they're going to unroll. Do you know what those measures are going to be, and how do you expect that to actually develop in the next 2 quarters?
I mean, different industries are linked to each other, and automotive is one of the most important industries also for China, of course. And things that they're doing on the real estate side to maybe get that situation going a little bit might have a positive effect on consumer sentiment. We shall see, but I think it's too early to tell how that's going to develop in the second half of the year. So let's not speculate and see what they do.
Mercedes-Benz CEO Ola Källenius speaking to Bloomberg's Oliver Crook after the car maker's earnings this morning. Now, staying with the auto sector, Volkswagen has fallen in early trading after announcing it is working to bolster its cash position. The stock down by 3.2% as higher logistics costs and intensifying competition in China weighed on the second quarter earnings. Bloomberg's Oliver Crook also spoke to this business, this time to the CFO, Arno Antlitz, about its $700 million deal with the EV maker XPeng.
Look, we are very strong in China in the combustion engine business with market share about 20%, but we have to catch up in the BEV segment. And in order to catch up, we came up with a strategy with basically 3 pillars. 2 we discussed already. Let me recap the 2 quickly. One is more local for local development. So we opened and we founded a company in China that will eventually have 2,000 R&D people, and they will develop China for China, closer to the customer, 30% more speed. This brings the first step of competitiveness. Second, we team up with local technology partners to step-by-step improve our current platform, the MAB. For example, together with Horizon Robotics, we improve driving assistance function. Together with Thundersoft, we improve in-car infotainment, and together with Goshen, we improve the cost of our batteries. And now follows a third step, let's call it local product partnerships. So with that local product partnerships, we take into account that the Chinese market, the Chinese PV market, is developing rapidly. And together with, for example, Xiaopeng, we bring as early as 2026 to new electrical models, local for local, in the B+, so in the upper mid segment, to have an even stronger setup in China. And the same is true for Audi. They will work closer together with the SAIC. So we have really this 3-pillar strategy, and we are rather confident with this strategy. We will catch up, at least in the midterm.
And of course, the message from the government in Germany, however, has been de-risk, de-risk, de-risk. This is sort of the opposite, the re-risk. How do you insulate yourself to some of the concerns that the German government is flagging on China?
Look, from our point of view, this fits into the strategy because all the initiatives I just mentioned, more local R&D, local for local, local tech partnerships, and also local product partnerships, they work on local for local strategies. So these products are not meant for the global market, but rather improve our competitive position in China. And from our perspective, they fit into that strategy.
That was the Volkswagen CFO, Arno Antlitz, speaking to us. Later today, we'll be speaking to other car executives. The Renault CEO, Luca De Meo, will be with the team at 9:40 UK time, so stay with us for that. Here's what else we're watching out for today. Yesterday was all about the Fed. Today is about the ECB. At 1:15 UK time, we will get the ECB's rate decision with a quarter-point hike expected. President Christine Lagarde holds a news conference after the decision. We'll bring you that live, of course, here on Bloomberg TV. At 1:30 p.m. UK time, we will get some key US data, including GDP and initial jobless claims. Also today, Russia is hosting the African heads of state for a summit as President Putin seeks to show he isn't isolated internationally despite ending a key grain deal this week. We've seen that have an impact on soft commodity prices. We understand it's just flashed across the Bloomberg terminal that President Putin might speak at the end of that conference. And over in the United States, the Italian Prime Minister Giorgia Meloni will be meeting with President Biden. Relations with China and the war in Ukraine are surely going to be at the top of the agenda. Coming up, we'll continue the earnings themes, this time around basic resources. Anglo American is the latest miner to post lower profits and lower its dividend amid a slowdown in China. We'll speak to the CEO, though, next. This is Bloomberg.
Are facing some tough challenges. Higher living and education costs and wages that aren't keeping up with inflation are making it harder for them to support themselves. And they're relying more on the bank of mom and dad. A new bank rate report shows nearly 70% of parents with kids 18 and older are putting their own finances in danger to help them. About half are dipping into their emergency savings or delaying paying off debt, while 43% drain their retirement funds. So where do you draw the line? There seems to be a generational gap. as older parents can't understand why being self-sufficient now is a lot harder than it was for them. Gen Z seems to think on average that 22 is a benchmark for covering the expenses, while baby boomers say their adult children should pay their own way closer to age 20. Either way, it's a family decision. Bankrate suggests having a conversation with your kids and setting a specific dollar amount or time frame for footing the bill.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Markets Today, 14 minutes into the European trading session, and one area of weakness around the UK stock market. Elsewhere, we're seeing some positivity. The Fed, the tech earnings story from the US, and the European earnings story all weighing in here. Let's get to one of the businesses reporting this morning here in Europe. Here, listed in London, of course, the Anglo-American mining business. It's the latest miner to post lower profits and lower its dividend. That's as China's economic slowdown continues to dampen earnings for the world's biggest mining companies. Anglo reported underlying earnings of $5.1 billion in the first half, down from $8.7 billion last year. Let us get into a conversation then about where this business heads with Duncan Wanblad, who is the CEO of Anglo-American, and who joins us now. Duncan, thank you very much for joining us. Let me start with the role of China in your earnings story. How are you doing in China versus expectations? Because this does seem, just for the rest of the sector and for yourselves, does seem to be something of an area of concern for investors.
Yeah, morning, Anna. Absolutely. China is very important to the whole of the world, and particularly to mining. It has really weighed quite heavily on the results for the whole of the industry, I would say. And I think fundamentally, this is a function of everybody's assumptions as to how rapidly China might come out of the COVID restrictions. And I think there was a bit of an assumption that this might happen a lot earlier than it actually is happening. So I think that's what you're seeing weighing on the results at the moment.
Yeah, there's the post-COVID sort of reopening. There's also the property sector and the ebb and flow of that, Duncan. And I know that the Politburo has suggested it will provide support to the real estate industry, which accounts for around 40%, I think, of the nation's steel demand. What signals are you getting as to the level of stimulus that industry is going to get and what that means for you?
Yeah, so what the people on the ground are telling me is that there's definitely movement in this direction. So as anticipated, this type of stimulus is likely to happen, and what we've just heard from the Politburo is very, very positive in this regard. So as I say, this is probably much more of an issue of timing, of when it's going to happen, as opposed to if it's going to happen. And we are starting to see signs of that turn, but a lot slower than we first expected them to happen.
Yeah, a lot slower than many expected, I suppose. Let me go to a different geography, Duncan, and Botswana. Anglo's De Beers business has recently signed a new long-term deal with Botswana, which gives the country a bigger percentage of the money made when these diamonds are mined. I'm sure there are good reasons for all of that. But in terms of the business and the role it plays within Anglo-American, does it change the way that De Beers is able to compete for capital within the Anglo-American parent?
No, and it really doesn't, because all of our businesses compete on equal footing for capital, and that capital is allocated based on the fundamental returns that those businesses offer. We were delighted with the agreement in principle with the government of Botswana. This really cements what's been a over 50-year relationship and puts it on even more of a solid footing to go forward together for at least another 50 years, because part of this agreement was the extension of the leases for 25 years on the ground out there. So really good business, really great assets, and we're all delighted with this agreement in principle.
Does it change? Does it change how you see the long-term picture of your ownership of De Beers from what you've said there about the decades ahead? It doesn't sound like it.
No, it certainly doesn't. As I say, these are the best assets in the industry as far as diamond production is concerned. And what's more important is, like many of the other commodities that we see across the whole slate here, they are very difficult to find. And there have been no real finds in diamond resources for many years now. So that's a real advantage to have two of the very best assets within the portfolio.
Can I pivot to the UK then, Duncan? And there's a lot of focus on, of course, the Woodsmith fertiliser mine that you have in the north of England. Some investors are not entirely convinced around the timescales and the prospects of this. What can you say to reassure investors of what you're expecting there?
Well, I tell you what, Woodsmith is a polyhalite mine, and it's going to play into one of the most important demand themes that I think are going to pervade society for many decades to come, and that is the provision of food and the security of food, but doing so in a way that is also friendly to the planet from a carbon neutrality point of view. And in that sense, the resource that is Woodsmith is almost a unicorn. It is without comparison to anything that exists in the same space. And we are on track to develop that both from the mine point of view and from the market point of view. So that's really exciting. When this is built, it's going to be providing an enormous amount of high quality fertilizer, with a right carbon footprint in an area that's going to be deeply desired by the world for many years to come.
And Duncan, any sense of how much you can sell and at what price? Just because this is, my understanding at least, is it's a new thing, and the market may be struggling to put prices on it.
Yes, well, look, I mean, there is a price for it. There's a price on the screen today, but it's a relatively small market, and it's a really healthy price, a lot lower than we're designing for. I mean, a lot higher than what we're designing for at this particular point in time. And our approach to this, and by the way, the first thing to really remember here is that the components of Poly4 are exactly the components that go into all fertilizer blends that exist in the market today. So it's not that different. What is different about it is how it presents and how it releases into the soil and what it does for soil structure and crop yield over time. So with that, it means that it can blend into existing fertilizers, it can stand on its own, and we will make the market for this gradually over time. So we'll start in 2027, and we'll start building up to 5 million tons, after which we'll ultimately get to the 13 million tons that we've designed the mine to. And on that basis, there isn't any sticker shock associated with the impact to market.
Onto other things that are more carbon neutral, Duncan, and that is around the clean energy transition and all the metals that are needed for that. Are there metals that you're particularly concerned about in terms of the level of supply in the market? Because I know McKinsey, Trafigura, many others have given their assessments of metals that we might be short of in the decades ahead.
Look, I do definitely believe, and I've been saying for ages, that the demand for these metals and minerals is extremely strong fundamentally. The reality is that the supply of these metals is materially constrained, and there are a number of reasons for that, including the geopolitical status of the world, the ability to get permits for these projects, and the fact is that to the extent that these resources are available and they are taking so much longer to develop because of all of these constraints. And so the consequence of that is, I do believe that there is likely to be a deficit of these materials in the medium term.
Thanks so much, Duncan. Thanks for joining us. Duncan Wamblad, the CEO of Anglo American. This is Bloomberg.
tag on the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Welcome back. Bloomberg has learned that advisors to the UK Chancellor Jeremy Hunt are increasingly concerned that the Bank of England risks raising interest rates too much in the coming months. For more on this Bloomberg scoop, we're joined by our colleague Philip Aldrich, who's been writing this story. Phil, great story then. These are independent advisors to the Treasury, though. So in that context, how much does this represent a Treasury view? Therefore, how much should we think this matters?
Yeah, I mean, it's a good point. The Treasury does listen to its Economic Advisory Committee, and it's understood that these views are being considered by the Treasury quite seriously. So I think there is a degree of alignment of views that obviously the committee, Economic Affairs Advisory Committee, is suggesting that the Bank of England doesn't need to go so hard on rate rises. It doesn't need to get to 6% or 5.75%, or it can start to take the foot off the gas, as we're seeing in the US as well. But.
Yes, indeed. And I mean, there's a few ex-BOE policymakers on this council. They also seem well informed on the views of Mervyn King, previously, of course, at the Bank of England. What's the reason that they give for why interest rates might go too hard?
So there are signs that the economy is slowing. So interest rates take a couple of years to work their way through to the real economy on the ground, and there are signs that is beginning to happen now. So the concerns are that if the bank continues to push when we are beginning to see this slowdown in the activity data, in some of the jobs data, then the bank may overdo it, and then we'll end up pushing the economy further into contraction or actually into a recession when perhaps that is not necessary.
Phil, thanks very much for the update. Bloomberg's Philip Aldrich with the latest on that Bank of England story, that Bloomberg scoop that he has written for us. Now, coming up on the programme, as investors look ahead to today's ECB decision, my next guest says it's too early for central banks to claim victory on inflation. That's an interesting contrast, perhaps, to the view of those advisors to the Treasury. We'll speak to Virginie Masseneur from the Allianz Global Investors. That's next. This is Bloomberg.
not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power in the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Langs.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Welcome back. This is Markets Today. We're 30 minutes into our trading day. Here are your top stories. Stocks rise as investors bet the Fed's next move might be a pause after it raised rates to the highest level in 22 years. Attention now turns to the ECB. Investors price in another hike. But with economic data looking weak, will it be the last? We're live in Frankfurt. Plus, Barclays buyback overshadowed. Shares in the British bank tumble after investment banking revenue misses estimates. Welcome back to the program, everyone. A quick check of the big picture here then, and we've got European equity markets on the rise. In particular, the French market seems to be bouncing back from yesterday's losses, so that's adding some upside, up by 0.7% over in Paris, up by more modest amounts in London and in Frankfurt, although London turning positive is something of achievement, given that it was negative earlier, and we have quite a lot of a weight being applied to it from energy stocks, from some of the banking names, and from some basic resource stocks as well, although basic resource is actually turning a corner and recovering as we go through the program. Let's have a look at the sectors with that in mind. And actually, the media sector is the best performing one this morning, up by nearly 3%. We see Universal Media Group as part of that, up by 11.6%. So that's one of the bigger movers there. Interesting stories around advertising developing. If you look at the Facebook story yesterday, the ITV story here in the UK today, energy is the weakest sector. Autos and parts, utilities also fairly weak. But actually, around 3/4 of sectors are in positive territory. Gives you a sense of the broad positivity for stocks. Let us check in on some of the individual names that are on the move. Joe Easton has a briefing for us. Joe.
So we'll start with a look at some of these financial stocks, Anna, and it is a mixed picture in the banking space with Barclays getting hit. Now, this is partly due to weakness in the investment banking division, as you say, but also the net interest margin guidance downgraded in the UK as retail customers look for higher rates and therefore move deposits around between banks. Meanwhile, BNP Paribas going the other way, rising amid better than expected costs and also some outperformance in its equities division versus the fixed income unit. We actually spoke to the company earlier today about that issue. Here's what they had to say.
The reason we see this is basically the corporates, the clients we have, they have been able to adapt. Whatever we're seeing now in the economy is something they have been anticipating and adapting to. So the clients we see are doing well, and we don't see any pickup in cost of risk, and we confirm our objective to be below 40 basis points.
So that was BNP Paribas there speaking about their equities unit, but we've also brought up Jupiter Fund Management here in the UK, rocketing up 18% in early trading. This as they see a better than expected assets under management. Retail trading looks pretty weak, but it's the institutional clients boosting Jupiter. Meanwhile, I've brought up DWS. This is the unit that was spun out of Deutsche Bank, the asset management company. A break from earnings. This is an upgrade over at JP Morgan. Recommends buying that stock as their greenwashing probe looks to be concluded quite soon. Now, we're also going to look at some of the energy-focused stocks. You mentioned we did have Shell, that one weighing on the FTSE 100, but we've also got Centrica, this one doing a share buyback as they continue to get a boost from British Gas. Neste, don't get this confused with Nestle, as I did when I first saw the drop on my screen, down 9%. This company does oil, but also chemicals. And as I say, Shell, the big one here, a bit of weakness. They have done a share buyback. We also spoke to the company earlier today, so have a listen to what Shell had to say.
Actually, in Capital Markets Day just last month, we announced a 15% increase to our dividend, and we announced a minimum of 5 billion in the next 2 quarters when it comes to buybacks. And we're just fulfilling the commitment we made. Actually, we're going slightly further with a 15% dividend hike and a 3 billion buyback this quarter.
So that was Shell there speaking about their buyback, and a mixed picture, as I say, in energy with these varying stock prices on the screen. But we've also brought Airbus here over in the aerospace. Supply chain issues continue to be the big issue for the French company, something we've seen at Rolls-Royce and also the other supplier, Raytheon, in the US this week. So that one down 2% over in Paris. Finally, quick look at some of the consumer-focused stocks. I mentioned Nestle with an L, that one up 2%. Strength in the old classics like Kit Kats, Nespresso, George Clooney's old favourite, those doing well. Meanwhile, Universal getting that jump, Taylor Swift still boosting sales. Teleperformance, this is a services company, outsourcing company, short seller target down 9%, weak earnings. And Ocado finally trimming a 25% surge yesterday as shorts were squeezed out. That's coming down. Ocado is one of the worst performing stocks in London today, Anna.
Yeah, really volatile on Ocado. Joe Easton helping us to not confuse our chemicals and our Kit Kats. Thank you very much from our equities team. Joining us now with her take on the earnings story so far, Virginie Massenev, Global Equity CIO at Allianz Global Investors. Virginie, nice to see you once again. We're into earnings season, aren't we? It's busy. It's been busy this week, and it'll be busy again next week, I think. Give us a sense of the themes that are coming through for you. I mean, a couple that stood out to me is the different takes we're getting on China, or the sort of insights we're getting on the China growth story, and the different performances of consumer-facing companies depending on which segment of the consumer they're facing. What are you taking away from this earnings story?
Yeah, so in terms of themes, I think what we have really in the markets now are finally not anticipating a rating cut in the second half of the year. So the key questions are really around the disinflation boom that we're seeing. Is it going to continue? Do we have a recession or a slowdown? And another way to say it is good news is bad news. So are the companies delivering good numbers, if you want, now ignoring potentially a slowdown? We have destockings, we have inventory movements, we have currency movements, and of course, potentially a high increase in the cost of debt. Now, on the global basis, if you want, China clearly is on the path to deliver 5% GDP growth. And I think, as you can see with what was announced this week, they want to support the economy, but they are doing it in a very measured way because they are very concerned about going back to large packages that created so much excesses the last time around.
And on that increased cost of debt, Virginie, would you expect more businesses in Europe over the next half year to present some level of a higher level of distress in their balance sheets then as a result of this?
So this is something that we're doing a lot of work on right now. Interestingly, in terms of refinancing, there's not a wall of money coming, and a lot of companies have taken debt on a fixed basis. And in fact, 75% of non-financial debt in America and Europe is on fixed rate. However, for companies who will need to refinance, will have a big step change. Debt overall has risen for Europe and America from 68% to 90% of their combined GDP from before the crisis. Interestingly as well, some of the companies that we're talking to are benefiting from rising rates because they've got net cash and fixed debt. However, you have to be aware that in that refinancing for companies who need to issue bonds or take new debts, there will be a step change in the cost.
And one of the themes you focus on, I know, is energy transition, climate transition, Virginie. We spoke earlier to Shell, and I was asking what message we take away from the fact that they're paying out big money to shareholders, and does that mean investors are not so keen for them to invest it in clean tech? He says, no, they're doing both. But I wonder if the money is getting to those clean technologies, Virginie, in the scale that is required.
Well, as you know, it's been a theme for a very, very long time for me, and I think the money is getting there. What we're saying, though, as investors, is you have to be very careful about which part of the supply chain, if you want, you buy into. If you look at solar, for example, with China being a very strong player, you have in some way some of a capacity. So we're now talking about the infrastructure that helps us get to that next stage of development, and we're finding some opportunities there. And of course, the key thing is to see what Europe is going to do to counterbalance the IRA program in America. So I think over the next 10 years, we'll see a lot of capital going into that area.
Okay, and is there upside for stocks if we see specific parts of the stock environment, if we see more detail on what Europe plans to do? Because I think we've heard something, haven't we? And it's sort of counter to the Inflation Reduction Act.
Yes, exactly. And, you know, I can't name companies, but if you think of mitigation, adaptation, infrastructure growth, there will be a lot of companies in Europe and in, you know, all around the world that will benefit from that. The key also is cost of capital. Going back to that cost of capital, we're not going back to a zero interest rate environment. So projects will have to have, over their time period, real returns. And of course, there you go back to the AI theme, because AI and technology in general, in that theme of digital Darwinism that you know, is very important, will help the companies who can embrace it to increase their productivity and accelerate their earnings profile. But again, some of the thing that's very important is to understand it's not only about plugging AI, it's about having the right mindset, the right operating model in order to embed it and benefit from it. So it's a lot of change ahead of us and a lot of opportunities.
Virginie, thank you very much. Virginie Masseneuve, Global Equity CIO at Allianz Global Investors, with her perspective on the world. Coming up, we'll focus on the interest rate story. We were just talking about the impact that has on balance sheets of corporates. Well, we'll talk about the ECB's rate decision. It's due later today. Anna Stupnitska joins us from Fidelity International to give us a preview. This is Bloomberg.
Okay, so you're moving in on me, quick, distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knight.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
You know, just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right. I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
Studios in New York and San Francisco. Our expert hosts of the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. Is expected to hike rates, but how high will rates need to go, and how fast will they get there?
The ECB is still catching up.
They want to hike and show strength when they actually should show caution.
Bloomberg Television and Radio brings you the breaking news from Frankfurt and detailed analysis after ECB President Christine Lagarde's press conference.
Are we at the end game for the ECB?
Most questions will persist up until Lagarde goes on that podium.
Coverage begins today on Bloomberg, your global business authority.
This is Markets Today, 43 minutes into your European trading day, and the European picture looks fairly buoyant, actually. A bit of a recovery in the FTSE as well, which was negative earlier on in the session, now all in positive territory. The Fed helping, tech earnings, the domestic European earnings story helping as well. Thinking about where we go on the central bank narratives, though, yesterday was all about the Fed. Today, it's all about the ECB. The central bank makes a policy decision later today with a quarter-point hike all but baked in. The meeting comes after disappointing PMI readings earlier in the week, as well as a bank lending survey that showed plunging demand for loans among companies in the euro area. For more on this, Bloomberg's Maria Tadeo joins us from Frankfurt, from the ECB, in fact. And Maria, the decision itself then widely expected. So where's your focus going to be today?
Yes, Anna, we're expecting another hike, another 25 basis points hike from the ECB. That should take that deposit rate to 3.75%. And Anna, for two very simple reasons. One is the head of the ECB, Christine Lagarde, she already indicated that. She pre-announced it in the previous meeting, repeated the message in Sintra. And then, of course, we have that core euro area CPI print that came in for June at 5.5%. You put it all together, it takes you to this 25 basis points hike today. But the focus will be in the future. It will be the press conference, and it will be about September. And up until now, in every press conference, we had a Lagarde who really wanted to reiterate and repeat, we're focused on inflation, we're restrictive but not restrictive enough, to play the tough central banker. But obviously, when you have weaker economic data, you also have that lending survey that you alluded to, a lot of this makes that bravado will difficult to maintain over time. And then, of course, there's a big question about, do we get an ECB that perhaps decides to be more neutral? They have a lot of data that they're looking forward to. There will be new projections after the summer. Will they indicate with just state data dependency, no actual bias one way or another? And just very briefly, Anna, to me, I'm particularly curious too about the idea of rate cuts. If there's any questions about the markets perhaps expecting or anticipating rate cuts sooner than expected, will she try to tame that debate and shut it down? The nightmare scenario for the ECB at this point would be inflation above target and chit-chat about sooner than expected rate cuts. So again, are we going to see a Christine Lagarde that really decides to put that debate to rest?
Maria, thank you very much. Bloomberg's Maria Tadeo in Frankfurt. Let's dig further into this story with Anna Stupnitsky, global macroeconomist at Fidelity International. Anna, thanks for your time this morning. So let's think about the ECB and where it heads. As Maria said, 25 basis points is the expectation for the hike today. So the focus then turns to September. How are you expecting that sort of forward outlook from the ECB to look today?
Yes, it's going to be an interesting meeting, Anna, because the ECB is looking at the economy that is clearly weaker even than what we saw back in June. So the trade-off between growth and inflation is much sharper now and sharper than what the Fed is looking at. So how they change that signaling about the level of rates from here, but also the duration of rates remaining high in this restrictive territory is going to be so interesting. What we are focusing on today is the three tests that Christine Lagarde laid out earlier this year to assess whether policy is restrictive enough. If you remember, it's inflation outlook, underlying inflation, and the strength of the transmission mechanism. And I think the third test is being met given this weak lending survey that you mentioned and weaker PMIs. So that's something that we are watching, whether she will confirm that.
Yeah, it's interesting. I was going to ask you about that ECB report around lending to corporates. It showed the biggest drop on record. I think it goes back to 2003. That does really suggest reduced demand from corporates. But then when we were talking to an equity strategist earlier on, she was suggesting that 75% of these corporates that she's been analysing are actually on fixed rates already, and they don't need to refinance in the short term. So I wonder, to your point, how much that transmission is getting through.
Well, that is the main question, really. And as you know, the strength of the transmission mechanism has been in question this time across developed markets more generally, and partly because of, well, of course, because of excess savings that we had accumulated during the COVID. So that has been driving demand, but also structural changes to the debt market, to the mortgage market, where a lot of debt is on fixed rate. So that transmission is not getting through. And I think in Europe, it's probably less of an issue, and we are seeing the impact on the real economy. But there is definitely a big issue for the US and for the UK as well.
So thinking about, so we've been through the 3 tests, and thinking about how long the ECB pauses after hiking, Anna, I mean, well, firstly, are you expecting another hike in September? And after that, does it pause? And if so, for how long?
We think that today's hike might be the last one, but the risks are skewed to the upside, given that the underlying inflation test has not been met. It remains strong, as we saw on a number of core and a number of underlying measures. And of course, the ECB will be focused on that. So the risk is skewed towards another hike in September or later in the year. And of course, they will try to signal that the rates will stay higher for longer in coming months, at least for the next few months. But what happens exposed is a different question. They might have to implement a rapid course correction if the economy slips into a deeper recession. But at least they will try to signal that they are determined to keep policy in the restrictive territory for a long time.
Anna, do you think the Eurozone economy is in recession right now? And if so, is hiking into it going to be seen as a mistake in future?
Well, we think it is probably slipping into a recession. Yes, a number of indicators suggest that. Certainly Germany is in recession. Again, it depends how you define a policy mistake. We think that inflation is strong enough, and underlying inflation is strong enough to require a recession to get inflation back to target and to prevent inflation expectations from de-anchoring. Central banks have to drive their economies into recession. Of course, the ideal outcome is that this recession is mild enough and short enough for the inflation to fall. But actually, what we are worried about is actually potential upside shocks to inflation again from here, given the potential weather-related disruption. El Nino, we have that hot weather moving to the northern hemisphere, and also the shocks from the Ukraine war and how that the grain flows, whether they are sustainable or not. So I think that is actually a big risk, the upside risk to inflation from here, and that means central banks will have to maintain that hawkish bias.
And so with that in mind, is it a focus on soft commodities and the prices of those that we need to keep in mind as we head into the second half of the year, Anna?
Yeah, if we look at agriculture generally, or food indices, I was looking yesterday, actually we've seen a huge rally year to date or over the past 2 or 3 months in those food prices, and that will start impacting headline inflation at least. And it's emerging markets that are most vulnerable to this, as we know, particularly because central banks there look at headline inflation. But it will start spilling into global inflation. So we are watching that very closely.
Thanks so much, Anna. Anna Stupnitska, global macroeconomist at Fidelity International. Coming up, we'll take a look at some of the biggest equity movers during this hour. We're an hour into trading, of course, including Barclays slumping this morning. Details next. This is Bloomberg.
The EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. And it's then the market forces and the business incentives of global companies that transform that EU rule.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Bloomberg. This is Markets Today, 54 minutes into your trading day, and it's a positive picture overall for European stocks. Let's get the individual movers. Joe Easton has a briefing. Joe.
So these are the gainers in terms of those companies reporting earnings. So firstly, BNP Paribas, the French bank, rising amid strength in their equities unit, outweighing some weakness in fixed income, really fun in terms of investment banking. Anglo-American, the London-listed miner, actually downgraded its growth forecast due to weakness in China, but this stock was already down 20% heading into the report, so that is up 2.5% on the London market. Nestle, meanwhile, raising the prices, but consumers not yet cutting back too much, although in the Eurozone, some slight weakness in volumes, but overall holding up pretty strong there. Roche, meanwhile, the pharma company listed in Switzerland, we haven't touched on that one yet, but that's a $250 billion company, a slight upside surprise in terms of some of their eye medicine, but most of their focus is, of course, in cancer, where they continue to be a real European powerhouse, and that one edging up. Pretty big move in terms of the size of the company. In terms of the losers, then, Barclays, the big decliner in the UK, down 6%. As I say, weakness in investment banking, but also in UK retail, where they have downgraded their net interest margin outlook due to customers trying to find higher rates of interest on their savings. Volkswagen underperforming the peers. Stellantis over in Italy jumping today, given some strong earnings, but Volkswagen falling behind on the electric vehicle space, losing out perhaps to the likes of Tesla. So that one is down following a weak earnings report. Meanwhile, Shell, this is 8% of the FTSE 100 index, second highest stock, down 2%. Airbus dropping as well due to some supply issues. Anna.
Thank you very much for that, Joe Easton, with a briefing on some of the movers today, some of the gainers and the losers. Overall, then, stocks moving higher here in Europe, up by 0.8%, gaining more and more, actually, as we continue through the session. The CAC 40 bouncing back from yesterday's losses. We're seeing NASDAQ futures up pretty strongly, up by more than 1% now. That tech earnings story and the Fed story are all combining to produce higher stocks. This is Bloomberg.
Is as safe as it was when you were in the government?
It's not as safe as it was. Crime is clearly rising. I mean, it's not back to the dark old days of, pre-Giuliani in the early 90s. But we got to be careful because safety is the foundation of everything. And so I know the current mayor is committed to reducing crime, but we're going to have to be incredibly aggressive in making sure that crime does not increase.
Are you involved any longer in New York City matters, or you're advising?
Yeah,
New York
the
City?
mayor and governor actually asked me to co-chair a panel or a task force on reviving the commercial districts throughout the city. So I've been in the middle of that.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, aren't you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. And market movers. This is The Pulse with Francine Lacqua.
A very good morning and welcome to The Pulse. I'm Manus Cranny in Dubai. Here's what's coming up on today's program. European stocks and US futures gain. Speculation is the Fed is close to the end of its tightening cycle after raising rates to the highest level in 22 years. The focus now shifts to the ECB. Investors price in another hike, but the economic data is looking weak. Will it be the last? We're live to Frankfurt. Plus, a bumper day for buybacks. Barclays, Total, and Shell all plan to return cash to shareholders. We'll speak to the top executives this hour of Accor, Renault, and Roche. All coming up in the next 60 minutes. The map is live, the prices are there, and this is what we've got for you. It was a bit like the Field of Dreams if you listened in to the Fed meeting last night. That was 1989. It was homage to American dreams. And here we are, a homage to the end of an ECB rate hiking cycle as we see prints of green all across the spectrum. Shell doing a buyback of $3 billion. Where will Barclays take you next as they warn that you are near the end of that nirvana, which is NII, net interest income, and the trading plummeted by 41%. Barclays doing a buyback. So you have buybacks everywhere from Total, Shell, and Barclays, all having various impacts across the map. But I want to take you to the position there. Shell down nearly 2% on the open. This is some of the concerns in the oil majors have about the outlook going forward. Now, if you want to understand the challenge for the ECB, and we'll catch up with Maria in just a moment, Barclays down 5.5% and change at this juncture. This is the lending situation. Robin Brooks on Twitter last night talked about the lending squeeze that there is. In the United States, there's a 2 standard deviation tightening, and in Europe, there's a 1 standard deviation tightening. It's picking up. Is it time to stop hiking with these kind of crunches in terms of credit standards tightening? It will transmit to the real economy. Let's have a quick look across the asset classes, because if you're a bond trader, you heard one narrative from Jay Powell last night was that we may go into pause land. However, JP Morgan think that you're going to have 9 months of a pause. What does that do to the short end of the curve? Do we stick at this kind of level? NYMEX is up by 0.8% as the survey at Bloomberg, 15 out of 22 say Saudi will extend its unilateral cuts, and also inventories draw down at Cushing. You have the dollar dropping. This was the barrier for the burrs has been removed to a certain extent, and so you are seeing the dollar down. Now, Turkey has just indicated where they are with end-of-year inflation. They estimate it to be 58%. 58%. We know they have a huge inflation issue in Turkey. There we go. But they are moving from unorthodox policy to more orthodox policy from 22.3% 3% is where they are. Dollar up, lira down, a smidge at the moment. Let's reflect on the Fed. Across the assets, this is what we've got for you as well. A little bit of movement in the wheat market. We're down. We had the biggest move down in 9 months yesterday. You're also seeing those 2-year yields move ever so slightly lower. Let's reflect on the Fed. It's done. 25 basis points. And the chair of the Fed, Jerome Powell, he left the door open to more increases and said they would be, guess what, data dependent.
We haven't made a decision to go to every other meeting. It's not something we've looked at. We're going to be going meeting by meeting, and as we go into each meeting, we're going to be asking ourselves the same question. So we haven't made any decisions about any future meetings, including the pace at which we'd consider hiking.
Eddie van der Veld is with me from our Markets Live team. Now, I don't know whether I go as far as Seema Shah to say it was a yawn, but it was pretty, insipid forward guidance. Does that mean a job well done with maximum optionality, Eddie, or do you think it's an extended pause? Come back to me, Eddie.
Yeah,
there you go.
Hello, Manus, can you hear me? Yeah, it was absolutely interesting. It was absolutely interesting. Right. I don't think there was anything like the panic, that we've all, the excitement that we've had in previous meetings. And, you look at pricing after the meeting, it's pretty much where we were before. And that's all fine, right? But during the meeting, there was a lot of moments of excitement. And you saw asset prices move a lot because the market was trying to make sense of not only what Powell is signaling, but what Powell is thinking, right? And I think we're going to hear a lot more of this data-dependent sort of line because I think that, the Fed genuinely does not know what it's going to do. The Powell doesn't know what to think about the future because we are getting mixed signals about the economy. We are getting slowing growth. We are getting hot inflation or slowing inflation. But at the same time, we're not there yet, right? And the jobs market remains strong underlying. So I think there is a lot of questions still to answer for the Fed. And I think that's why Powell does not want to commit. And I think it does take some of the excitement out of the Fed meetings because, but at the same time, it leaves a lot of questions open for the future. So I think it has actually become a lot more of a healthy trading environment for traders who want to put on positions, betting on where the future path is.
Well, I suppose it depends which group of people you speak to. Eddie, thank you very much. Between the bond and the equity traders, Eddie van der Veld at our Markets Live team. Joining me now is Sfia Salem. She is head of European rates at strategy at Bank of America. So what goes through my mind as I reflect on the Fed, let's just start there, is that if you're a meat-eating bond trader, you heard pause. If you're a quiche-eating equity trader, you heard soft landing. What did you hear?
No, absolutely. I think that the market really needed to hear a lot more emphasis on potentially an additional rate hike coming for there to push additional increases in rates from here. But what we heard from Powell was actually very balanced. And in fact, the word balanced came up 13 times, while having come up just 9 times at the last meeting and 7 times at the previous one. So he had a lot of opportunities to actually push the market to pricing a little bit more hikes, or at least to price out some of the cuts implied in 2024. But he did not. In particular, he did not focus too much on the fact that financial conditions have been easing lately, and he did not focus either on this additional guidance that the dots were pointing to, which is an additional hike for the next meeting.
Well, I started the show talking about the tightening in credit conditions, and a big shout out to Robin Brooks at IIF here. He flagged it in terms of the standard deviation move, the scale of tightening in credit conditions in the United States and in Europe. When you look at the constriction of credit, does it suggest to you that now it is important to pause and reflect and let the long variable lag take hold in both the US and in Europe?
I think when we look at actually the lending surveys, we find exactly what central banks are expecting, which is that credit conditions are tightening as a result of all the tightening that has been delivered. We've had 400 basis points of rate hikes from the ECB just in the past year, so it makes sense for credit standards to be tight. Now, one thing on the ECB's bank lending survey that may have surprised a little bit the ECB and could point to the need for more caution here is the fact that demand is falling a lot faster than banks were expecting. I think it's really that point rather than the financial conditions or the actual credit standard themselves that come as a surprise.
Well, I suppose it's a question really of trying to tamp down inflation and demand without breaking the system. Stay with me. We're going to pivot to the ECB. We have that decision today. As you know, President Christine Lagarde is expected to follow in the Fed's policy footsteps, I should say, with a 25 basis point hike later today. Our European correspondent, Maria Tadeo, is outside the ECB in Frankfurt. Maria, the sun is not... Wow, you're inside now. They brought you in from the cold, Maria. That's always good. Talk to me. What are we expecting today in terms of the red? I know you caught me there. You caught me. Thought you were outside. 25 basis points, but how many times do you think she'll go with balance? Do you think she'll match and meet Mr. Powell? Good morning.
Look, it's always a balancing act, and Manas, nothing is official until she makes it official, but you know it, I know it, probably anyone who owns a Bloomberg is ready for a 25 basis points hike today. Of course, two simple reasons behind it. A, she pre-announced it, repeated that message in Sintra, and then of course you had the core inflation print that came in for June at 5.5%. Obviously you put it together, it takes you to that 25 basis points hike, but a lot of this, as you say, will be about the future, and it will be about September, and you've talked about it with your guests on the show. The trade-offs now between the economy and inflation obviously become more of a flashpoint. We've seen the PMIs. They're not good. This is still an economy that's not able to catch a breather. There's a perennial question about monetary policy and the lag of it. When do you know enough is enough? And you put all of this together, you could argue there is today an incentive for the European Central Bank to actually stay pretty neutral, to not signal a bias either way and revert to this very data dependent. We'll look at the data and we'll take it from that basis on. Of course, we also know that there will be projections that will come up in September too, and that's when the new decision should take place from the ECB. So there's a lot at stake when it comes to September, but I'll be also curious, particularly in the press conference, about the idea of rate cuts, because the worst case scenario, the nightmare scenario for the central bank would be to have inflation above target and this chit-chat about rate cuts earlier than previously anticipated taking hold. Will she try to put an end to that debate? That I'm particularly curious about.
Okay, well, let's hope those nightmare scenarios don't come true. Maria, thank you very much. Have a good day inside the ECB. My guest is Sfir Salem, head of European rate strategy at Bank of America. You make it very clear that we'll have a little bit of a shuffling of angst at the short end of the curve, but the real action will come in the belly. So if I'm looking across the curve, the Bund, the Bobble, and the Schatz, it's the Bobble where you say, I'm going to see perhaps the most performance. In what way?
Yeah, absolutely. I think that when you look at pricing in the front end of the curve, it is actually implying a terminal rate just under 4% and a first rate cut by the ECB in the middle of 2024. We think the ECB might be comfortable with that. And if the market reads the press conference on the dovish side, if, for example, there is emphasis on the bank lending survey during the press conference and the market rallies, we believe that actually we will hear from those famous ECB sources post-meeting that try to correct any rally in the front end of the curve to specifically avoid the nightmare scenario that Maria was pointing to, the pricing, this rapid cuts. However, where the ECB may have less impact when pushing back against this repricing is in the belly of the curve, because investors now are still keen to put on those end of cycle trades, and it is likely to have the most impact on the 5-year point, we think.
Okay, Sfeer, thank you so much for being with me. Let's see what the guidance is today from Madame Lagarde. Sfeer Salem, Head of European Rates Strategy at Bank of America. Coming up, the French hotel operator Accor upgrades its full-year forecast. We speak to the Deputy CEO, Jean-Jacques Morin. He joins me next, right here on Bloomberg.
Are facing some tough challenges. Higher living and education costs and wages that aren't keeping up with inflation are making it harder for them to support themselves. And they're relying more on the bank of mom and dad. A new bank rate report shows nearly 70% of parents with kids 18 and older are putting their own finances in danger to help them. About half are dipping into their emergency savings or delaying paying off debt, while 43% drain their retirement funds. So where do you draw the line? There seems to be a generational gap, as older parents can't understand why being self-sufficient now is a lot harder than it was for them. Gen Z seems to think on average that 22 is a benchmark for covering the expenses, while baby boomers say their adult children should pay their own way closer to age 20. Either way, it's a family decision. Bankrate suggests having a conversation with your kids and setting a specific dollar amount or time frame for footing the bill.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Welcome back. The shares in the hotel group Accor slightly lower this morning. This is the French company reported revenue just ahead of expectations in the first half. They upgraded the full-year forecast. Joining me now is Jean-Jacques Morin, the Deputy CEO of Accor. Jean-Jacques, good to have you with me. A very bullish call on the RevPAR. It'll be up 15 to 20%. And EBITDA, also a strong guidance higher. Where are the strongest markets at the moment? Where is the biggest and most robust demand?
You know, the publication we went just through as being an additional quarter of, I would say, increased performance. Since 2021, every quarter is getting better, and Q2 is no different. Q2 is better than all the other quarters. And the short answer is that every segment and every region is doing extremely well. But the one with really leading in terms of the rebound in Q2 is Asia. You know that the recovery in Asia was lagging probably 12 months, the recovery from the other region. And hence, you find a very normal phenomenon by which now that Asia is reopened to travel and the COVID in China is behind us, I think you see naturally Asia leading the pack. But I must say, you take a region like Middle East and Africa, despite a gorgeous year last year, still continue to be extremely strong. So it's across all markets with Asia leading.
And when I caught up with Sebastian in Qatar at your new trophy assets there, it was pretty obvious that he just didn't have enough capacity to sell to the super rich, of which I'm not. Where are you on capacity? Do you have enough mid-tier capacity, upper-end capacity? Talk to me about the constraint and what you need.
Yeah, Sebastian obviously depicted a picture which has not fundamentally changed in a couple of weeks. We are probably 5% in terms of occupation rate behind the peak of 2019. But that situation is improving quarter after quarter. When I was talking to you about the improvement of the performance, really the first driver has been pricing. The driver today still remains pricing. Probably 2/3 of the improvement in the top line is coming from pricing, but 1/3 of it is coming from occupation rate getting better and better. And there are some element to it, which is also the capability in our hotels to get the right level of staffing. So the rehiring post the COVID crisis is now something which is getting normalized. So you will find out that the trajectory will improve quarter after quarter in terms of our capability to supply hotels. And this is what you see in the number. And this is also why, in fact, not only do we have quarter after quarter an improved performance, but as you mentioned, we are increasing our guidance for the year end, and we are talking of being somewhere between 15 to 20% in terms of RevPAR, but at the top of those 15 to 20%, which is a very, very nice result.
We look at images every day in Greece of wildfires, evacuations, and newsreels are rolling. You have exposure in Athens, Corfu, Crete, and Rhodes. Are you seeing cancellations? Are you seeing any drop-off in bookings?
Not at all. Not at all. In fact, the demand today is amazingly strong. We are the first months into summer, and you're right, the situation is, in terms of the heat waves is quite difficult in many places. But I can tell you, this summer will be better than 2022, and 2022 summer was the best ever. So I think you will find out that summer will just be incredibly strong, and we don't see nothing of those effects into our numbers.
You are in exclusive talks with Potel and Chabot. Is that the strategy for you and Sebastian, which is major trophy assets rather than mid-market volume size?
No, it's not. I wouldn't say it like that. You're right that we are in discussion with Potel, and the Potel is very much part of the lifestyle strategy by which you want to provide experiences which are unique, and as part of providing those unique experiences, the Potel and Chabot, which for those of you who don't know, is about catering, is unique. I mean, they are the top in the French market, and hence, having them as part of our family, if you will, is making our offer even richer in what we call lifestyle, which is, as you may know, 50% based on food and beverage and 50% based on, I would say, the more classical business of offering rooms. But I think here the strategy has been the following: there is a core business, which is what we've done for 50 years, which we call premium, mid-scale, and economy, which is based on very iconic brands like Ibis and Pullman. And this one we continue to nurture. This is a very stable base. It generates cash. It generates profit. We've got a very strong foothold, and this is going to continue. And on top of that, we had a relay of growth, which is what people demand today, whether they are the high net worth individual or more largely, I would say, the middle class, which is growing year after year and getting richer and richer. And that market is being addressed by lifestyle.
Okay, well, I look forward to a wonderful lunch one day in Paris. Hopefully, with the team, we can assess that. My guest this morning, the Deputy CEO for Accor, Jean-Jacques Morin.
product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
DOJ or other authorities
Could face bigger challenges next.
Fed was going to keep rating World Cup.
This is a 3.
As the economic picture does.
Is the OK is getting ready to make a decision.
Big energy, big results, big buybacks. Despite the drop in profits at Total, they are holding their nerve. They are delivering a $2 billion buyback in Q1 and Q2, despite their second quarter profit dropping by nearly 50% to just under $5 billion. So down an eighth of 1%, but the brutality came for Shell. They announced a buyback of $3 billion. But of course, this is a tough time. Quarterly income, $5.07 billion, down from $9.64. They're skimming off the top on CapEx. They're trimming $1 billion off CapEx to $23 to $26 billion. Coming up, the Rush delivers their profits. We talk to the CEO in a post-COVID world.
Okay, so you're moving in on me, quick, distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knights.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
You know, just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right. I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
Japan's
critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers Jobs Day like Bloomberg.
European stocks and U.S. futures gain on speculation. The Fed is close to the end of its tightening cycle after raising rates to the highest level in 22 years. Focus shifts to the ECB. Investors price in another hike. But the economic data is looking weak. Will it be the last? And a bumper day for buybacks. Barclays, Total Energy, and Shell, along with a few others, all plan to return cash to shareholders. Very good morning. Welcome to The Pulse. I'm Manus Cranny in Dubai. That rallying call, instead of drinks for all my friends, it's cash for all my friends in the form of buybacks. So we're in this eye of the reporting storm. And pharmaceutical is on the agenda. And Switzerland, Roche, the profits there fell just short of the estimates in the first half. That says new drug revenue at the Swiss pharmaceutical company failed to offset the disappearing market for COVID-19 tests and treatments. The CEO is Thomas Schinecker. He joins me now. Thomas, thank you for being with us. We're all conversant with COVID ending and that lump being taken out of your results. But you have had challenges in cancer and Alzheimer drug failure. What is the gravity of the situation for you? Is this your sort of low point for Roche? Good morning.
Thank you for the invitation. As you mentioned, in the first half of the year, we had really fantastic growth of our base business, meaning excluding COVID of 8%. We all knew the COVID pandemic would end, and that's why we also included that in the guidance. In fact, that's what we saw in the first half of the year. And this growth is really driven by a strong portfolio of new medicines. We've launched 20 new medicines since the end of 2015. And those are going to carry us into the future. And also on the diagnostic side, we've had very strong new launches of new innovative instruments and tests, and many more to come. With that, we're very confident that we'll continue to grow, especially after this period of where the COVID sales will wash out. This will be by end of Q1 of next year.
Do you think there is a disconnect, Thomas, between what you've just said to me and what the market believes? I look at your stock's performance, 400 Swiss francs last year, 271 is where we are at the moment. You're underperforming your market and your peers. The market does not seem to believe that you have the right combination of future drugs. What do you say to those people who think you lack the pipeline that you need to deliver blockbuster after blockbuster?
Well, first, we probably profited in the share price also from COVID. And as this washes out, the underlying performance will shine. We have these 20 new medicines that will continue to drive growth. And we have a number of very interesting new medicines in the pipeline. Tiragolumab in cancer, just to name one. Giredestrant in breast cancer. Fenebrutinib in multiple sclerosis. We've just done this deal with Alnylam on hypertension, which affects 1.2 billion people in the world, and 80% of them not being controlled. So we have a number of very interesting medicines. And again, this year, we launched 2 new medicines. So you see that our pipeline is performing. And I do believe that as we continue to deliver positive results, as we've done this year, throughout the year in the different trials, that this will also be reflected in the share price.
Okay, so you're asking for forgiveness and time?
I'm just saying that I think we have a great pipeline. We have great on-market portfolio. And once the COVID effect washes out, this will be seen, and we'll continue to deliver on our pipeline, and that will be then also reflected in the share price.
So with that ambition in mind, and that's a very clear message, and I get that, which is the pipeline is fine, it's firm, it will take a bit of time to deliver. Do you say, no, Manus, I don't need to go and buy any new pipeline, I'm organic all the way, or will you hold the option to buy pipeline?
It will always be a mix. It's been a mix in the past. We've always been looking also at external opportunities. I mean, we look at hundreds of companies every year, and we decline 99.9%. It has to make sense from a scientific perspective. It has to make sense from a financial perspective. And as you've seen with the deal that we made with Alnylam, we are open to medicines coming in from the outside. But we're looking at transformational, best in disease, or first-in-class medicines. And this is one of those opportunities. And those are the things we're open to at the right price.
You have given some guidance today, low single-digit growth. Is that, again, I sort of reflect back, I want to benchmark where you are and where you're going to. Low single-digit growth for this year, but what would be your ambition going forward? Is that a low point in the guidance?
So we don't give out any guidance for the next years. What I can say is that, as you see it in the first half of the year, we already had washed out 2.7 billion Swiss francs of COVID effect. We guide for the full year that we'll have a 5 billion COVID effect. With that, 80 to 90% of our COVID sales will be washed out. So the last effect will be in Q1, and I do believe that the underlying performance will then be more visible.
I looked at your shareholder roster, BlackRock, Vanguard, Norge. You're very well insulated. You have some of the best people in the world on your roster. But are you receiving pressure from any of your institutional shareholders for something a bit more radical to happen at Roche?
In pharmaceuticals, you have to take also certain risks. And that means we have to invest into new medicines. And at the end, only 1 out of these 10 medicines makes it. And people that are investing into pharmaceutical stocks, they're all aware of that. And they know that you will have times where you will have failures. But at the end, as Roche, we have delivered 20 medicines over the last 15 years. We have a full pipeline, 81 potential NMEs. We are always also looking at external opportunities. So I'm confident that Roche will perform well into the future.
What do you fear the most? An activist investor coming on board or a bid? Are you always ready to defend Roche?
Look, for us, it's all about innovation. And that's the clear focus of myself and my team. We're continuously working on our pipeline, looking at how we can get more medicines that have first-in-class, best-in-disease potential, new transformative medicines into our pipeline. If you look at the 5 major growth drivers that we had in the first half of the year, you look at Vabysmo, the new eye medicine that this year will make more than 2 billion Swiss francs. Last year, we just launched it. It transformed the standard of care. You look at Ocrevus, strong growth driver in multiple sclerosis, revised the standard of care. You look at Hemlibra, it changed the standard of care for people with hemophilia. So that's our goal, deliver transformative medicines. And that's what keeps me up at night, not because I'm concerned, but because we're working hard to continue to deliver those kinds of medicines.
As you look at that roster of new drugs, you said you're open to drugs only if it makes sense and only if it's transformational. Where is there a mini gap? If you had your choice, Thomas, of an area to acquire, where would that be in drugs?
Well, I wouldn't want to comment exactly which areas we're looking at. I hope you understand that. But clearly, we look at transformational medicines.
Short and sweet. Broad church, transformational medicines. We wish you well. Let's hope we get back to the 400 Swiss francs from where we are today. Roche CEO Thomas Schinecker there joining me around the conversation. Coming up, another CEO conversation. This time, record margin, strong demand for the French car maker Renault says it will be facing problems with logistics. The CEO breaks them down for me. Luca De Meo in just a moment here on Bloomberg.
Is as safe as it was when you were in the government?
It's not as safe as it was. Crime is clearly rising. I mean, it's not back to the dark old days of, pre-Giuliani in the early 90s. But we got to be careful because safety is the foundation of everything. And so I know the current mayor is committed to reducing crime. But we're going to have to be incredibly aggressive in making sure that crime does not increase.
Are you involved any longer in New York City matters or your advisor?
Yeah, the mayor and governor actually asked me to co-chair a panel or a task force on reviving the commercial districts throughout the city. So I've been in the middle of that.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
The piece of banking delivered today, Barclays and BNP Paribas, and it's calling a peak of NIMs at Barclays. That has the market under pressure. The lender is cutting its guidance for the UK, and they say net interest margin to 3.1%. Total income, a 14% rise in the total income from a year ago. But they are warning here that things are beginning to top out. People are worried about the overall health of the economy. Their trading revenue down 41% from a year ago. That 1.75 billion. And of course, fixed income trading division, FIC. Those meat-eating bond traders, they'll not be eating too much meat tonight at Barclays. Fixed income trading down 22% at 1.2 billion. And the equity revenue fell 60%. Wow, 60% trashed in the equity trading division, down to 563 million. And of course, there was a serious error included that a year ago. So Barclays is down 4.3%. Paribas on the other side, however, storms away. Cost control, reassuring the street. You've got Morgan Stanley saying, look, strong set of results. The market did well. So a lot of the analysts are sort of saying the net income, 2.81 billion. That dropped by 9%. But the estimate out there was, so it's below the estimate, down 9.1% year on year. And the estimate was for 2.52. But I think really they're just focusing on the cost cuts there. The performances in costs were particularly impressive, according to KBW. And so they're rewarded, up 3.39%. A lot of job cuts have gone through. It's been a tough time across the banking sector, investment banking. Deals are not getting done in Europe. They are here in the Middle East. Come to Dubai. That is the narrative. Now, Bloomberg has learned that the advisors in the UK to the Chancellor, Jeremy Hunt, are increasingly concerned that the Bank of England risks raising interest rates too much in the coming months. Is that interference? I don't know. Let's ask Bloomberg reporter Philip Aldrich. Why should the advisors to the Chancellor have any concern at all about what an independent Bank of England is doing? Good morning.
Morning. Well, I suppose they are the sort of economic advisory council, so their remit is broad. I mean, there are a couple of there are a couple of members who are recent members of the Bank of England, and there's Andy Haldane, who was the chief economist until recently, who was sort of sounding the alarm on inflation quite early. And obviously, inflation is kind of the key issue. So they are an independent committee themselves. The Bank of England is independent. I think it's perfectly reasonable for one group of independent people to comment on another group.
Absolutely. Well, I suppose the horse has bolted. I mean, we've had the fastest hiking cycle. I think I don't know whether it's in history, but it's certainly pretty brutal, isn't it? Can you foresee a time when the Chancellor and the PM become more openly critical of the Bank of England?
There was it's very unusual for the politicians to be openly critical of the Bank of England. Obviously since '97, there's been independence and separation of responsibilities, and the guidance, the principle has always been that the politicians will not comment on monetary policy, and the central bank officials are not supposed to comment on fiscal policy if it does stray. And there have been moments. So in 2007, there was a lot of tension behind the scenes between the governor at the time, Mervyn King, and the chancellor at the time, which was Gordon Brown. And it later came out that Gordon Brown had wanted to intervene in the bank publicly, but felt he couldn't because he didn't want to undermine the independence of the Bank of England. So it's a pretty fraught thing for the government to actually go public with criticisms. Politicians are free to do that, and they have been doing that quite a lot. But for the for the executive branch of Parliament, for the government itself to do that would be unusual.
I mean, Phil, you've got a lot, as you say, of ex-BOE policymakers on this council. What would you say the consensus is in terms of the government's actions on inflation? I mean, the Bank of England's actions are blunt and big-headed, aren't they, in terms of interest rate hikes, and they have QT at their disposal as well. But what about the government impact on inflation?
Yeah, so the government's first responsibility and is on inflation is basically do no harm. It's tough line on public service wages. Public sector wages is an example of that. So they're saying we're not going to raise wages at sort of inflation levels, 8-10% as the public sector workers have been requesting. But they have just raised them 6%, which is definitely a bit higher than the 2% target. So that, in that respect, they're not helping. There is a degree of public sector restraint in terms of just general public spending. So that is an effort again by the government to help restrain any inflationary impetus. And there are things they can specifically do, but they can raise taxes to take demand out of the economy. If they just want to mechanically change the level of inflation, they can do energy price caps. They can do sort of price caps on food, on essentials, for example, and subsidize retailers. But there's things they can do, but they will be politically unpopular.
Philip, yep, thank you very much. Well, they take a lot of action around the price caps, haven't they, and the energy crisis. Philip Aldrich there with the very latest on the Bank of England. Let's turn our attention to Renault. The first half earnings have topped, recently upgraded their expectations. The car maker says that operating margin at a group level is going to hit 7.6%. Now, the shares a little bit lighter this morning, with the company still facing some logistic troubles, headwinds following the aggressive price cuts from Tesla. Let's bring in the CEO, Luca De Meo. He joins me now. Luca, great to have you with me. I mean, a great performance, and you have record margin, strong car demand. It's almost Churchillian, isn't it? You've sort of never had it so good. Can the wave roll on? Good morning.
Good morning to you all. Yeah, I think we are setting the condition for an improving performance in the next couple of 2-3 years. So far, we have delivered like 6 semesters in a row and always improving. So we are there to make it work. And one of the things that will change for sure the chances for us to improve is the fact that we will be launching 12 new models next year. So normally in the automotive business, when you have a fresh product, everything works. So we are pretty optimistic about the future, although we understand that environment is very challenging for a number of reasons, as you know better than me.
Well, we'll dig into those in a moment. So the new roster comes out next year. I want to square away a couple of things. The margin today, 7.6%. Can you hold solidly in the mid-sevens on margin?
Yeah, that's what the guidance we're giving for the end of the year. So we have, of course, now we are in July, so we have visibility. Normally, the H2 is always in Renault world better than the H1, but there's a lot of uncertainty into the market. We see on the positive side the kind of a deflationary movement on energy cost and raw material. So I think even if we see, of course, more pressure on pricing because volume are coming back and ability to produce, but on the other hand, we see the cost going down. So that's our commitment, is to improve on the performance that we have declared today, and which was, as you said, a historical performance for the group.
I mean, that is the dream scenario for you, isn't it? Which is you have a deflation on the cost and the input side, and you still manage to hike the prices to us. I want to talk about the order book, and I want you to take me inside the order book. It's 3.4 months at the moment, so you're above 2 for the rest of the year. I get that. I want to know where the strongest part of the order book is. I had Louis Vuitton on the other day, and they said there are cracks in aspirational luxury at the upper end. Where are, as it were, the strongest part of that order book? Is it at the upper end? Let's just break it down for me.
Yeah, it is at the upper end. It is with cars, that we technically, let's say, consider the C-segment cars, so mid-size SUVs for us. In commercial vehicles, which is also a very good margin business for us. So this is how the place, how the orders are. And we expect with the renovation of the Clio in September to, of course, boost the absolute number in terms of order book. But in the meantime, we have to deliver a lot of cars which we couldn't deliver for many reasons and for logistic issues in the last couple of months. So, but it's a very healthy. We're selling cars at the higher end of the spectrum in terms of equipment. This was also part of our strategy is working. We have the majority of the cars that are selling the richest version, and that's the whole story of volume to value and the Renaulution. So it's actually working. You can see it in the numbers.
I'm old enough to remember the original campaign for the Clio. I don't necessarily know that would fly these days, but that just gives you some idea about how vintage I am. Let's talk about something much more modern, which are your electric vehicles. Tesla are cutting prices. Is there pressure on you to cut prices? Are we going to have a price war in EV?
There will be pressure for sure. It was already the case, this year. What we did, in particular on the Megane, which was our precious product, was actually try to protect the value. So we didn't enter into this thing, accepting maybe a slightly lower volume that we had planned at the beginning. But then you can see the consequences of this into the residual value. So you look at the residual value of the Megane is actually growing, whilst the residual value of competitors is going down. And that's, for us, important, because then you set the right basis for the future business of EV that we will, develop with Ampere. That's our strategy, and we're not going to deviate from that.
You really prepared to give up market share?
Yeah, we did. We did in general in the last 3 years. We're making more money now than when we used to sell the double of the cars. So maybe there was something wrong in that old model.
Well, let's just talk about alliances. Nissan, they're chipping in 600 million euros, I understand, for a 15% stake in Ampere. Is that a cherry bite? Are you going to grow that alliance? Are they going to take a chunk? Are they going to go from a bite to a chunk?
So I have to correct you. It's not 600 million for 15%, because we haven't declared the share of this. It's a chip of 600 million, which is a substantial amount of money. The most important thing is that we have secured, in the deal that Nissan will have a board seat in Ampere, which I think is important for us, also to create stronger relationship with our partner. So they will be part of the governance of Ampere. And one of the things that you shouldn't forget is that, in fact, Nissan is, of course, taking a share of it as an anchor strategic investor, but is also, has also decided to produce cars on our platforms, on our plants in the Ampere perimeter. Okay. So there is an upside also in the margin that Ampere will do because of the production of Nissan cars within the Ampere perimeter.
A little bit earlier, you said Mitsubishi would buy. Okay, and they will have a board.
Yeah, I think so. I think so. I mean, we have to follow the, let's say, the internal Mitsubishi governance process, but the intention is there to do the same, and so we will, of course, be very happy to welcome Mitsubishi people into Ampere.
So you said that they would buy products. So are they ready to contribute to take $600 million for Nissan? Mitsubishi, would you expect them to do the same?
You gotta have to them, no? So I think that I know that they would be ready. They find the Ampere initiative and project very interesting, especially to secure their survival in a way in the European market that will turn to EV very, very soon. And we have also ideas on how to serve Mitsubishi also in terms of production of models within Ampere. We have space, and we'll try to do business with them if it makes sense for them. But the question has to be asked to Kato-san and his colleagues.
Are we still in full buying mode? I look at bank lending in Germany collapsing. Credit conditions are tightening. We've had an energy crisis. Is buying a beautiful new car still top of my priority? Are there any cracks at all in the consumer or indeed in the commercial landscape?
Look, I think on one end you can look at the market dynamic. We see that in terms of orders, the market never recovered to the historical level. So we are probably 20-25%, depending on the market, below what we have experienced the last decade. So it's already a fact that there is an issue there. On the other hand, we also have to say that the market has been low for years, and for many years, at a certain point in time, people will have to renovate the fleet and their cars. Okay. So, and if we are able to, offer products that are attractive, then of course we can take advantage of it and we can take market share. One of the, let's say, chances that
Luca,
Renault has.
We're going to have to leave it there. Yes. We wish you well on taking more market share. The Renault CEO, Luca De Meo, my guest this morning, right here on Bloomberg.
Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
I think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television. Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready? Harnessing the power of Bloomberg Business Week, Carol Messer and Tim Stenivek bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Bloomberg Surveillance Early Edition with Danny Berger and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, 5 p.m. in Hong Kong. Our top stories today. The Fed keeps its options open after raising rates to a 22-year high. Jerome Powell says further hikes will be data-dependent as officials fine-tune their policy. Attention now turns to the European Central Bank. A rate hike is on the table, but will today's move be the last in the cycle? Bloomberg is live in Frankfurt as the ECB decides. And the global earnings parade continues. Meta surges after a sales beat in a sign that ad spending is back. Welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Kriti Gupta is in New York. Kriti, I got to be honest, I'm way more excited for the ECB today than I was for the Fed. It was a snoozer, but it was kind of meant to be a snoozer. No surprises, no fireworks.
And I think that's really what's creating a little bit of a tailwind when it comes to the markets, because that is where you're seeing fireworks. A little bit of green on the screen, Danny, this morning. Now, look, it is 5 a.m. New York time. Traders are just getting started here stateside from a macro perspective. But take a look at this. S&P 500 futures already higher by 0.6%. I'll do you one better, Danny. Look at NASDAQ 100 futures higher by 1.2%. Essentially this idea, that key line in the presser yesterday, that the Federal Reserve staff thinks that maybe a recession is now off the table, that a soft landing was indeed achieved. Of course, we will see if that's true in retrospect, but it's enough to give a little bit of a push to these equity markets a little bit higher. Add on the earnings beat you saw from Meta after the bell yesterday, and it gives you an extra boost into the tech sphere. The idea that ad spending is back. We're going to dive into that story throughout the hour as well. But look, the bond market is, I think, we're getting that snooze fest concept from 386 on a 10-year yield, virtually unchanged at the moment, but the direction of travel is still in the positive direction. A lot of that volatility is going to come from what you hear from the ECB today, the read-through from the other side of the Atlantic. Interesting to me, though, is that the FX market is doing something wonky on its own, because if you look at the dollar, you are seeing broad weakness down about 0.3%, but its biggest index contributors for the Bloomberg Dollar Index is coming from Mexican peso and the Bank of England, the two most hawkish banks at the moment in the world right now. Nevertheless, dollar max below that key 17 handle, down about 0.5%, Danny.
You know it's going to be a good day when Kriti Gupta uses the super peso on her market board. All right, I've got a Europe wrap-up here. It is all about earnings in Europe until we get the ECB. That, of course, will be the main show. Do we get a shift to a more dovish stance from them? For our TV audience, I got a little bit of weirdness on my screen. There we go. It's all fixed up for you. European stocks, those are up more than 1%. All right, we're going back and forth here, but European stocks, there we go, full for you, up more than 1%. The euro, here's where we're seeing some strength coming in versus the dollar. Again, this makes me scratch my head. Why is the euro so strong when the data has been so weak? It really comes down to the fact that it's the dollar moving things. It's perhaps a Fed that didn't have any hawkish surprises in their decision. It's also benefiting sterling. But this is what I come down to as to why this is more about the Fed than it is the ECB, because German yields are ticking lower by about 2 basis points. If this was a story of a more hawkish ECB, that shouldn't be the case. But instead, Critty, we're seeing Germany and really throughout all of Europe just track the American bond story.
Yeah, and I think it's going to be perhaps a little bit of a role reversal in just a couple of hours, to your point, Danny. But let's stick there. Let's stick to that stateside story. The Fed raising rates to a 22-year high with its 11th hike of this tightening cycle. Markets speculating whether we're at the peak as Chair Powell leaves the door open for more hikes.
I would say it is certainly possible that we would raise funds again at the September meeting if the data warranted. And I would also say it's possible that we would choose to hold steady at that meeting. We're going to be making careful assessments, as I said, meeting by meeting.
Bloomberg Markets editor Phil Serafino joins us now. Look, Danny called it the snooze fest, and it did kind of feel that way when you heard from Chair Powell. Yet you're seeing the equity markets really rallying off of that news. Is it safe to say that we've achieved a soft landing?
It's hard to believe, but it does look that way. I mean, a lot of people have been skeptical, myself included, that the Fed could thread that needle, bring inflation under control, and not trigger a recession. The equity market's been optimistic about that for months. You know, you look back to the lows in March, right after that mini panic around regional banks in the U.S., the equity market has taken off, and the things that are leading are, tech, financials, consumer discretionary. So the market has been pricing in sort of the perfect outcome, and at least at this point, that's what they've gotten. Now you have to look ahead. Powell says it's all data dependent, so the next couple of months, people are going to be laser focused on those inflation reports.
As not to be left out from the monetary policy fiesta we're getting this week, the BOE, which goes at it next week, a great scoop from the Bloomberg team that the Economic Advisory Council, which I should say Critty and I have had members of the council on the show ourselves, have said that they are worried about the BOE going too far, going too fast, hiking too much. Surely, Phil, this is not the UK Treasury meddling in monetary policy, because it sounds a bit like that.
It does indeed, and it's important to note that the UK has been an outlier all along. Inflation has been running much hotter. The economy, the economy has been in tougher shape, and they have a lot farther to go. You look there, inflation's still hanging close to 8%, whereas the US has gotten it down to 3%. The ECB has gotten things down to 5% in the Eurozone. So it looks like they have farther to go, and I'm not sure how well the markets would take it if the BOE were to back off in the face of what looks like political pressure.
Yeah, again, we know this UK bond market is one that is unforgiving to Andrew Bailey, so the bond vigilantes would have none of that, I'm sure, Phil. Thank you so much for joining us, Phil Serafino there. Okay, now our focus turns to the ECB. President Christine Lagarde's expected to follow in the Fed's policy footsteps with a 25 basis point rate hike later today. Our European correspondent Maria Tadeo is at that meeting at the ECB in Frankfurt. Maria, this decision, much like the Fed yesterday, was widely expected. So rather than the 25 basis point hike itself, where is our focus going to be on today?
Yes, Danny, and it is expected, and of course, nothing is official until she makes it official, and that is, of course, the head of the ECB, Christine Lagarde. But again, she pre-announced this hike today in the previous meeting, repeated this idea in Sintra that inflation, well, maybe cooling down somewhat, but it's still projected to be seen too high for too long, so therefore warranted action was needed for today. And then, of course, you have the core CPI print that came in for June and 5.5%. You put it all together, and it takes you to this 25 basis points hike today. But you're right, it's not so much about the monetary policy decision per se, but it really is about this press conference and the guidance going into September. We know that July was seen as a necessity by the central bank, but September is up for play, and that is where the focus will be. Any indications, any inclinations from the European Central Bank in terms of what the future path for rates will go.
And of course, with September in focus, you mentioned the future path of rates. Just how important is this press conference then? I mean, what kind of precedent could Madame Lagarde actually set?
Yeah, and it will be key because, again, it's about the calibration of the message, as a messaging, it's a language, as a tone that she will use. And look, there's many ways that this could go. And of course, we're waiting for that press conference to figure out exactly what is the message she wants to deliver to markets. On the one hand, you could argue, well, she's still going to focus on we're a single mandate central bank. There could be a hike with a dovish pivot or just altogether. And the ECB that decides to be just neutral, no actual bias either way. Just look at the data, revert back to mega data dependent, and wait until the summer break when you have this idea of the monetary policy, the lag behind it, also the trade-off between inflation and the economy. We got the London survey, we got the PMIs. This is really an economy that for the time being remains under pressure. So it really is about the signaling. And you could argue they have an incentive to just keep flexibility altogether, to keep all options open and just mega data dependent. Remember, go back to that line that she used to repeat up until a few months ago.
Maria, be honest with me. What's more important today, Lagarde and the ECB or Mbappe and Real Madrid?
Mbappe and Real Madrid. Look, wow, that's a very difficult question. Look, what I will say is he wants to play for Real Madrid. I know it. You know it. My 85-year-old grandma knows it. This is just a question about putting a number on that contract. Mbappe, you know, if you watch this, s'il te plaît, just make a deal now. If you need a house in Madrid, I help you, but you need to really put an end to the saga. It's been going on for too long. We know you want to play for Real Madrid. Let's just put an end to this. And I'm sure he watches because obviously he cares about his personal finances. I mean, it all comes down to the money ultimately.
True. True. Well, you heard it here first. Mbappe, if you're listening, Maria's 80-year-old grandmother will happily have you as a roommate. Maria Today, reporting from Frankfurt, everything from monetary policy to football. And tune in. I love it. Okay, great. If he wants to live in Brussels, sure, Maria's also got a place for you there. Tune in to our special coverage of the ECB decision and press conference at 8:15 a.m. New York time. That's 1:15 p.m. if you are in London. All right, the big week of tech earnings continues with Meta topping forecasts for second quarter sales. CEO Mark Zuckerberg spoke about the company's bet on the metaverse on the earnings call.
I can't guarantee you that I'm going to be right about this bet. You know, I do think that this is the direction that the world is going in. You know, there are a billion or 2 billion people who have glasses today. I think in the future they're all going to be smart glasses, and you know, all the time that we spend on TVs and computers, I think that's going to get more immersive and look something more like VR in the future. Like all of these trends line up to make me think that this is the right thing. I think we're going to be happy that we did this.
Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, usually the market doesn't love the idea, or at least in the recent past, didn't love the idea of Meta spending a lot of money. But this time, the focus wasn't on that because shares are up 8% pre-market. What's the concentration for markets?
Yeah, well, it's definitely not the metaverse. Yeah. It's all about AI, and I guess what's happening with that ad revenue. So it's a pretty simple business. They make their money from selling advertising. In the quarter, we saw that ad impressions were up 34%. Pricing on those ad impressions is down 16%, but the trend's an encouraging one. And for the next quarter, they're expecting an acceleration in the growth. So ad revenues up about 12%. The quarter just reported, maybe about 20% up in the next quarter. And there's a couple of things going on there. First, Reels, their kind of TikTok rival, is getting more and more traction. So that's encouraging, and that's helping to get people to spend more time on Facebook. The second is how they're using AI to promote new content to users. So making you say, hey, you're kind of following this person over here you don't follow, they've got some interesting content, let's show that to you. And that's also helping to boost time on Facebook, and that allows them to sell more ads. And so I think people are encouraged that the momentum is improving. They're getting traction with some of these products and on AI.
Well, Matt, at the core of that is these AI processors. It's more expensive. It requires more chips as well. Let's bring another player into here, Samsung. How well placed are they to tap into that rising demand for the AI space?
Yeah, not so well placed now, but you know, they're clearly pointing to improving trends in the second half of the year. And you know, the AI is throwing up all sorts of new buzzwords. A new one we've got is high bandwidth memory, and this was a big announcement from Samsung today that they're planning to double their production capacity for those high bandwidth memory chips by 2024, and those chips are essentially what allow you to train AI technology for things like generative AI. So I think they're going to be a bigger player there. I think inventory has really kind of hurt them in the first half, but they're expecting that to unwind. They said inventory peaked in May, and they're expecting demand for chips to pick up in the second half of the year. They're not the leading player in that space. It's one of their local rivals, SK Hynix, which is the big rival, but they're clearly trying to make a bigger push in that space, and clearly AI is going to be a massive part of the technology market over the next 5 to 10 years. So it's definitely the right thing for them to be doing to shift investment in that direction.
Matt, thank you very much for all of that. That's Bloomberg Intelligence's Matt Bloxham. And later today on Bloomberg, we're going to be hearing from the Meta CFO, Suzanne Lee. That will be at 12:30 p.m. Eastern. First, though, coming up on this show, a beat for BNP Paribas and a miss for Barclays. We'll have more on today's European bank earnings and some more earnings divergences, this time between Mercedes and Volkswagen. Mercedes boosts its outlook. Volkswagen paints a gloomier picture. All of that next for you. This is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
Right.
so it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right? And
Yes.
making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple of people, our average restaurant now does about over $1 million per restaurant in digital sales.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority.
Equities, we are performing a tad better than average. And if you look indeed at FIG, it's basically a tad lower. And the reason it is a tad lower is that BNP Paribas is a European powerhouse when it comes to fixed income. And one of the elements that we saw picking up in the previous quarter is basically the US-based credit side. And so BNP Paribas is more European, therefore is on that part a little bit different. But if you look again at CIB as a whole, the bottom line is up 5%.
The CFO of BNP Paribas there speaking earlier on Bloomberg Television, calling it a European powerhouse. Jan-Patrick Barnett joins us now for more on today's European bank earnings. Let's start there with BNP. Look, they called it a European powerhouse. We know it's one of the largest banks in Europe. What kind of tone are they setting for Europe at the moment?
Well, I guess if you ask the big banks, everybody says he's a European or a European powerhouse. So
That's kind of interesting. Well, I mean, the thing is, like, the operational business was not too bad. I mean, like, interest rates are still helping the bank, of course. We're seeing some softness in the fixed income trading, which is a traditional strength of BNP, and that's not perfect. But the shares are up because BNP is pulling an old European banking trick, and that is, if your operating business cannot like convince too much, then you just like screw the costs a little bit tighter, and they did this very successful in this quarter. And that's something that I was surprised by a little bit, because I thought like that European banks are like pretty much have reached the lowest cost base that they can. But it seems like there's still room for improvement, and BNP did this, and so shares up by about 3%.
But the blessing and the curse of higher interest rates is, okay, it can benefit someone like BNP Paribas, but JP, it looks like Barclays is a really good example of what happens when NIMs peak.
Yeah, absolutely. And we saw this already yesterday with the reporting from Lloyds, that we have like diverging paths here in Europe, where the EU rates are still like providing some tailwind for the banks, while in the UK, it seems like the peak is behind them and all the benefits are reflected in the numbers. So that's not boding well for Barclays, who cut the guidance for the rest of the year regarding their net interest outlook. Still, like, Barclays also has the issue that the sentiment towards the bank is not great over the past year or two. So the numbers actually, I would say, were not like too bad. But if you are in a position like Barclays where investors really don't like your stock, you have to be like super convincing and super strong on your numbers. And they just couldn't show that. That's why the stock is like down 4% today.
Yeah, some interesting divergences and messages coming from the European banks space. Bloomberg's Jan Patrick Barnard, we thank you as always for breaking that down for us. We go from banks to cars. European auto giants also reporting this morning. Volkswagen, the odd car maker, out in an otherwise upbeat earnings season for the industry. Bloomberg's Oliver Crook spoke with the CFO on earlier. He says he's optimistic.
There's a certain uncertainty on the side of the customers in terms of inflation, but I personally don't expect a recession in the next quarters. And for the automotive industry, both this year and also next year, we are quite optimistic. I expect a small growth, 4 to 5% for the automotive industry next year. And this is also true for the major region, mainly US and Europe, and China perhaps a little bit lower.
Oliver Crook now joins us for Berlin. Oliver, look, the Volkswagen CEO, the chairman of the Federal Reserve seem to be on the same page when it comes to the macro. Talk us through the key takeaways.
Yeah, absolutely. I mean, Volkswagen came in as kind of the weakest one of all of the bevy of earnings that we've had today. You know, they kind of cut their outlook in terms of deliveries a little bit, but still, you know, not a catastrophic quarter. What was most interesting about VW was the news overnight, the partnership with Xiaopeng in China, where they're buying a 5% stake in the company to partner up to really reinvigorate their EV sales in China, which are really lagging behind. And now if we breeze through some of the other companies, I'll do a little word association. Mercedes, Maybach, up 40%. The luxury trade is still in. Stellantis, it's all about costs going down, margins beating. Renault, record margins there. And Porsche signaling some issues on the supply chain. But again, a solid quarter. Regionally, really, it's the United States that is showing resilient. Europe is a little bit more mixed. You know, it's going to grow a bit. However, what we're learning from this, as you were saying, is that the soft landing narrative is really applying here for the auto sector.
Oliver, elsewhere, the Dutch Coast Guard is still trying to extinguish a fire that a cargo ship carrying thousands of cars was on. At the moment, it seems like the thought is that potentially this was an EV that caught fire. What have the car makers you've been talking to saying about this? I mean, if anything, this is not a great image for them.
No, and that's still speculation. We don't know yet, but we know that of the 2,857 cars, 25 of them were EVs, reportedly, and the speculation is that one of those caught fire. And this blaze is still going. We're coming in on 36 hours of this burning. So whose cars are they? I spoke to the Mercedes CEO a little bit earlier. Here's what he told me.
About a tenth of the vehicles on that ship are Mercedeses. And we're in contact with authorities to establish the facts. So we're looking into that as we speak. And as the facts become clearer, then we'll see how things unfold.
So if that's about 300 cars that belong to Mercedes, that's still 2,500 cars. We don't know who they all belong to, but we know that Ford, Stellantis, Renault, Nissan, Toyota say it's not their cars. BMW says that their cars are aboard. So we still have to get more details on who they are. Really, the focus now is extinguishing this fire, which is, as you can imagine, a very complex operation. The craziest thing, perhaps, is that this is the second time that this has happened in about a year and change. We lost 4,000 VW vehicles last year in the Atlantic.
Yeah, that is incredible, Oliver. I honestly had no idea that this is something that had happened before. Oliver, really fantastic interviews. Bloomberg's Oliver Crook there in Berlin. Coming up, we're going to take a look at some of the other earnings out of Europe, some big movers to cover. This is Bloomberg.
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions. That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
The EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. It is then the market forces and the business incentives of global companies that transform that EU rule.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month. From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Quick check on some European movers this morning that reported earnings. Nestle is one of them, creating a big gain. the biggest gain in 6 weeks. Their guidance was lifted. It's all about the pets. Their Purina cat and animal brand saying performs the best for them. Shell, that is tumbling. A tough quarter from a high bar, but they did announce $3 billion worth of buybacks. And then one of the best performers, Universal Music Group. Kriti, I'll give you one guess as to which artist has made the most money for them when it comes to merchandise. Who do you think that would be?
I mean, I want to say Enrique Iglesias, but I know it's not him.
Oh, I love that. I wish it was him. It was Taylor Swift. Come on, Kriti. I feel like it's, I mean, it was too obvious, so I appreciate Enrique instead of that. All right, coming up, we're going to get back to the serious talk. It's Esther Reichelt of Commerce Bank joins us on the ECB next. This is Bloomberg.
Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
I think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. The Fed keeps its options open after raising rates to a 22-year high. Jerome Powell says further hikes will be data dependent as officials fine-tune their policy. The attention now turns to the ECB. A rate hike on the table, but will today's move be the last in the cycle? Bloomberg live in Frankfurt as the ECB decides. And the global earnings parade continues. Meta surges after a sales beat and a sign that ad spending, well, it's back. I'm Kriti Gupta in New York with Danny Berger in London. Look, Danny, it's about 48, I'm going to argue 72 hours of central bank palooza. But when you look at the bond market, the stock market, earnings still playing a really big role.
They absolutely are. It's what's moving European markets here, Kriti. Although I will say, Out of everything today, I still can't get over Maria Tadeo telling us that her 80-year-old grandmother would house Mbappe if he went over to Real Madrid. I think that's the real story today, not Christine Lagarde and the ECB. All right, I digress. European equities, they're up 1%. It's exactly because of the earnings story, Critty. A lot of big caps reported and reported well. Nestle, consumer goods, car makers, banks. We were just talking to our reporters about it. The euro continues to strengthen against the dollar, as does sterling. Can that sustain itself if we get an ECB today that maybe takes a slightly more dovish turn? We're going to be talking with Commerzbank about that in just moments. But it's clear that the bond market is not necessarily indicating any more hawkishness than that of the Fed, because German two-year yields, they are moving lower by about 2 basis points. So we're buying bonds much like we are in the U.S., Critty.
Yeah, and it's interesting that some of that sentiment that you're seeing in Europe is already having a read-through into the U.S., although I would argue it's perhaps, I want to know what the opposite of a hangover is, but whatever it is, it's this continued story here in the States. The S&P futures, you are already seeing a rally on our hands, higher by 0.6%, but the real outperformance comes in those tech shares. NASDAQ 100 futures higher by 1.2%. And look, this is the combination of both the macro and the micro working in the equity market's favor. Essentially that the Fed came out and said, look, the recession risks that we saw maybe a couple months ago, they're off the table. It's no longer part of their key thesis. And on top of that, you have Meta earnings that are saying ad spending is back. And look, we know that in the tech space, that ad spending is very geared and very exposed to the economic cycle. So good news from both a macro and a micro perspective. But Danny, to your point, the 10-year yield far more exposed, perhaps not necessarily to the Federal Reserve, but to the ECB. Well, we're going to hear from them in the next couple of hours. Right now, 387 on the 10-year yield. I got to bring your attention to the FX space, though, because you are seeing broad weakness into the dollar. That kind of makes sense given the macro narrative that you were seeing from the Federal Reserve that they might be nearing the finish line when it comes to hiking. Nevertheless, the biggest contributors to the Bloomberg Dollar Index are the Mexican peso and the pound. And that really is crucial because those are the two most hawkish central banks in the world right now, sending dollar mex below that key 17 level, 16.75 there, weaker on the dollar by about 0.5%, Danny.
Yeah, it is a market convinced we're in the middle of the dollar smile, and that came after the Fed's 11th rate hike of this cycle. Critty, we've been talking about it all day. It's the Fed funds rate at its highest in 22 years. And investors are saying we're likely at the peak. They've trimmed their bets on further increases from the central bank this year. Here's Chair Powell at the post-decision news conference.
The staff now has a noticeable slowdown in growth starting later this year in the forecast. But given the resilience of the economy recently, they are no longer forecasting a recession. We'd be comfortable cutting rates when we're comfortable cutting rates, and that won't be this year. It's really a question of how do you balance the two risks, the risk of doing too much or doing too little. You know, we're coming to a place where there really are risks on both sides. It's hard to say exactly whether they're in balance or not. I would say it is certainly possible that we would raise funds again at the September meeting if the data warranted. And I would also say it's possible that we would choose to hold steady at that meeting. We will continue to take a data-dependent approach in determining the extent of additional policy firming that may be appropriate.
That is a man who did not show his hand. Chair Powell really keeping the door wide open. And the quote of the day yesterday, it has to go to Seema Shah of Principal. Here's what she said. Getting a rate signal out of Powell today is like getting blood out of a stone. He's keeping it tight. He usually slips up a bit, but he seems to have mastered it now. What does it mean to the markets to have a chair who has mastered the art of keeping his hand close to him? Joining us now is Esther Reichelt, FX strategist at Commerzbank. Esther, what do you make of this, making of a Powell who didn't indicate either way of where the Fed was going to go next after yesterday?
Well, I think he made a great job because that's the best the Fed can do right now. Like with the hike yesterday, they basically kept the door open for reducing the rate hiking pace to one rate cut every second meeting. Or, of course, they can simply change their projections in September if necessary, if the data coming out throughout the summer indicate this. And like in retrospect, they could have ended the rate hiking cycle yesterday. There's just so much uncertainty about economic developments, inflation developments, and I think that's the best they can do right now. And I think that the flip side of that, you know, like of not being in this comfortable position of keeping everything open, we will see that tomorrow in the for the ECB, because they are not, you know, like they are in a much more difficult position to master this communication
Yeah.
Sorry,
exactly. I mean, no, I got you, Esther.
Difficult communication, yeah.
Yes. Communication is difficult for us all. Look, okay, on that point,
all about
the ECB.
communication.
Yes, exactly. Well, the ECB, we had Klaus Knot, once a very hawkish member, refusing to commit to a September rate hike. This is different from him. This is something we haven't heard before. Do you think that's a taste of what we're going to get from Madame Lagarde today?
Absolutely. In my opinion, this was like the first indication that the ECB is slowly shifting to a more cautious stance, And I'm not, of course, every member is speaking for its own, but like always, it has been remarkable how they've speaking in one voice in the past, and this is changing now, so clearly they are shifting to a more cautious stance. But if you look at market expectations, it will not be that easily because they have still been very cautious, very hawkish at the last meeting, and now turning, switching, and maybe indicating maybe there will be a further rate hike, maybe there won't. This will, in my opinion, there is the high chance that this will be or that the market will react very disappointed to this, and that we might actually see, at least temporarily, a clearly euro negative reaction to the ECB tomorrow.
Well, what's interesting when we're talking about some of these central bank divergences, I'm curious, Esther, about how that translates to the actual trade here. Because if you look at that kind of dollar story that Danny had kicked it off with, the biggest movers are sterling, or it's the peso. To what extent are interest rate differentials still driving the FX trade, making kind of it a no-brainer in your universe? What do you think?
Yeah, actually, I think in particular interesting is the Mexican peso there, because this indicates it's not just about, interest rate differentials, because for the Mexican central bank, everybody is waiting for a signal how soon they are going to start cutting interest rates. Of course, they will still have attractive real interest rates, but, with the Fed stopping, with the U.S. inflation coming down, and with Mexican inflation actually, leveling off, the interest rate differential will not increase. Still, the Mexican peso can still gain. So in my opinion, it's all about credibility for the central banks. And this high uncertainty about economic developments in the Eurozone, in the US, in my opinion, put US dollar and the euro a little bit on the back foot, at least compared to central banks who managed this whole challenge much more credible than US and than the Fed and the ECB.
It's interesting that you mentioned kind of this carry trade that's already in play here. Esther, talk to us a little bit about currency weakness, though. We've continued to see some of these banks around the world stick to that hiking regime, the ECB, the Federal Reserve, maybe nearing the finish line faster. But for the folks that are sticking to that hiking story, when does that translate to currency weakness?
Well, yeah, that's exactly the important part. In my opinion, when it becomes clear that the Fed has actually finished its rate hiking cycle, and as soon as rate cuts come into play, this will be the pivotal moment. And with the U.S. or with the Fed keeping its option open, in my opinion, this moment is actually shifted more into the future, because rate cuts will only be discussed if it's fully clear that the Fed has ended its rate hiking cycle. So in my opinion, we are a little more or a little longer in this wait and see moment due to yesterday's Fed decision than we might have expected at the beginning of the month.
But Esther, the strength of the euro seems to just defy expectations. When you look at the data that's come in, PMIs, hugely disappointing. The ECB's loan survey, the worst since even before the great financial crisis. This isn't just because I don't want to pay too much for coffee when I come see you in Frankfurt next. It still seems strange the euro is as strong as it is. Can those gains sustain themselves?
Yeah, I totally agree. In my opinion, I definitely see the higher risk for euro dollar to the downside, in particular in the short term. The big issue is that the ECB is still much more focused on inflation, and inflation levels in the Eurozone are still much higher than in the United States. So the room for the ECB to get more dovish, or even to discuss rate cuts, that's not really credible in the very short term. There is definitely more room for the Fed, and in my opinion, that's still a supportive factor for the ECB. Plus, we also have to look at quantitative tightening there. I think this is definitely a surprising development for the ECB. I think many had expected that this will take much longer for them to come down from their asset holdings. And this might also be a supportive factor, because that's definitely something that has not been considered for the exchange rates over the last few months, because the focus was so much on interest rates, and this might change now.
Certainly a lot to digest, a lot of different cross currents. Esther Reichelt of Commerce Bank, all over them. We thank you as always for joining the program. Coming up, we go from the macro to the micro. Shares of Meta rising after beating on revenue and their forecast. We're going to dig deeper with the head of global TMT research at Itaú BBA. Stick with us. This is Bloomberg.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona,
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
I feel like we're getting to a good place on that with Threads. There's still a lot of basic functionality to build. 2 years, once we get to the point where it's at hundreds of millions of people, if assuming we can get there, then we'll worry about monetization. But I mean, that's basically the playbook that we're focused on. And
Meta CEO Mark Zuckerberg speaking there on yesterday's earnings call. Joining us now for a little bit more insight, Thiago Kapulski's head of global TMT sell-side research over at Itaú BBA. Thiago, let's dive right in here. I mean, about a year ago, Meta was talking about going all in into the metaverse, really kind of perhaps staring a little bit clear of the AI universe and an investment that a lot of its other peers were making. Now really saying it's still all about ad spending. How long does that sustain, do you think?
Oh, it's a great question. So first of all, thank you for having me here. So it's just crazy, right? Because when we think 1 year ago, the stock was like $95 or even less, and now it's $320, right? We think there's a lot of sustainability for revenues to continue to go up. We wrote about that last night during earnings. I think there are three main factors out there, right? So number one, this is the first time, or actually the second time, that ad loads and prices, go in the same trend, a favorable trend for Meta, which I think, is a factor related to the execution that they're having, Reels monetization, which is very important. They're doing a very good job out there. The macro is actually helping, right? We were talking about maybe hard landing, a few months ago. The economy is doing very well, very resilient. That's definitely very good. And also there's comps, right? So Europe the numbers in Europe improved quite a lot in the comparison versus last year. I think the work they've done, particularly in Eastern Europe, is definitely helping. So there's a lot in there, and we can only applaud the execution that they've been doing over these past few months.
Yeah, and you're already seeing the shares higher just in the pre-market session by over 8% this morning. But Thiago, what happened to the concerns about the demographic, this declining demographic, this declining use of Facebook, but also by extension Instagram as well? Are those no longer concerns in this new ad boost that they're seeing?
Great question. I think, they are doing a great job on this because I think they realized maybe 2 years ago that TikTok was getting a lot of share, and one of the reasons was the recommendation engine that they had, right? So there is definitely, especially among youngsters, I think a different habit of getting more interested in content that is not related to your friends, but can come from anywhere. And that's where artificial intelligence comes into play, right? Because you just need to have the best content and showing it to people at the right time. And I think the investments they've done on AI, which are a lot related to the metaverse, but are also related to their recommendation engine and to the way, people can use Instagram these days.
Yeah, Thiago, on that point, if I can jump in, because he talked also about AI chatbots. He said agents, he called them coaches. He kind of teased some of those things on the call. Not sure completely what those are. What do you make of that push? This feels like something more kind of chat GPT-like coming from Meta.
Yeah. I think you're definitely right. I think they are among the big techs. I think it's of course Microsoft is doing a great job on AI and doing really great things. But I think Meta is probably overlooked into these things because they are adding a lot into their content. They launched the Llama 1, Llama 2 models, right? Which are actually fantastic. They're partnering with Microsoft to distribute those products out there. So I don't know. I wouldn't be surprised if they continue to innovate and bring new things to improve even more the engagement, right? And all the engagement metrics, by the way, have been improving quite a lot on Meta, right?
And it's not just new products. I mean, what I'm about to say, you could probably say the same for their AI too, but it's also copycat products. They have Threads. We started out by playing some of the sound from the earnings call when he talked about it. The sound we didn't play, he went on to say, I'm highly confident that we're going to be able to pour enough gasoline on this to help it grow. This is a Zuckerberg who not that long ago was calling this the year of efficiency. Does that worry you, Thiago, if they're gonna pour gasoline, metaphorically, of course, onto the Threads product?
Great question. Even though I'm very much in favor of a financial discipline, and I hear a lot from investors, this thing. I'm just glad that Mark Zuckerberg is so confident, and I think you're putting the very right way right here.
Connection lost.
Because it just sounds he's back into the game, right? There was just so much concern last year that he wasn't doing much, that Meta was lagging behind TikTok and all of that. And now, last night, I think the most important thing was his tone, his confidence that he's making Threads work. He mentioned that Threads didn't have a very large team, so it was a relatively small investment to make that work. So yes, very important. But of course, I agree that you cannot only allocate capital on things that you cannot explain, right? But all in, I'm more. I see the glass half full here.
Yeah, I mean, Meta has their hands in a million different products and different ideas. It seems part of the burden and blessing of being a big tech company. Itaú's, BBA's, Thiago Kapulskis, we thank you, as always, for joining the program this morning. Coming up, a look at some of the market-moving events to watch throughout the day. We'll take you through it. This is Bloomberg.
Let's go inside the boardroom. Let's suppose you win a proxy fight and/or you just get invited onto the board. You go to your first board meeting, and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside of that room. We wouldn't be there if they really were doing well.
Connection
so it's
lost.
really hard for them to straight face and tell us we're doing well. And we present them with the plan.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on and folks are so excited about it. Climate tech is the hottest area to be in.
Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Kriti Gupta is in New York. Let's take a look at what's ahead on a very busy day today. First, it's the ECB's turn for its rate decision that will be out at 8:15 a.m. Eastern Time. That will be followed by President Lagarde's news conference at 8:45 a.m. Closely watch for any changes in her sentiment. Then a host of U.S. data out at 8:30 that will include GDP, core PCE, jobless claims, and durable goods. Then the Fed, the FDIC, and the OCC are going to be unveiling their plans for a sweeping overhaul of capital rules. All the banks will be closely watching this one. It's an open meeting that will be held at 1 p.m. Then finally, earnings are going to continue. Southwest Airlines, Royal Caribbean, Intel, and Ford all on deck. Kriti, I know you've been digging through some of these earnings on the U.S. side.
Yeah, there's a lot to go through, I've got to admit, Danny, but let's start with one of the biggest movers of the morning, one of the biggest stories from overnight. Meta, of course, at the top of everyone's list. We just had a great conversation with Thiago Kapulskis about that as well. Meta, higher by, get this, 8.5% in the pre-market, trading about $324 a share. This is their ad sales recovery, really boosting their forecast. But look, it's something we had heard from Alphabet as well, at a time when their investment on AI perhaps is still waiting to give returns. Even Alphabet said it's the ad revenue that's coming in handy. Same thing with Meta Platforms, higher by 8.5%, Danny. No small margin as early as about 6 a.m. this morning.
And this feels like a sea change in sentiment because previously investors were not forgiving of Meta just pouring money, setting money on fire, adding the gasoline to spending on projects like the metaverse. Now investors, and again, Thiago reflected this, are okay with them doing that, okay with them pouring gasoline onto Threads just because the ad business is so profitable right now.
Yeah, a really great time to experiment, which brings us to some of the other stocks as well this morning to put on your radar. Intel and Ford reporting after the bell, already seeing some green on the screen in the pre-market action. Again, something we saw pre-tech earnings as well. But Danny, in the next few hours, we're also going to get McDonald's earnings, and this is going to be before the market, and this is really important. It's higher by 0.6%. For me, the McDonald's story always reminds me of the currency story. 60% of their revenue comes from abroad. So if we're talking about dollar weakness, that is a built-in tailwind for McDonald's.
Interesting. I also wonder how much McDonald's actually benefits from a weak consumer. It's cheap food. We talk about this with the budget airlines. They do better. People maybe aren't willing to pay up, but they still want to eat out. Maybe they just go to McDonald's instead.
I mean, it's absolutely a possibility. The question is how much excuse the pun, there really is there. You're welcome. Is there really for expansion for something like McDonald's globally, especially when they are trying to really hit not just the emerging markets, but the frontier markets as well? And that seems to be where the hiccup is. We're going to dive into all of that in the next few hours. That does it for early edition. Surveillance is ahead. Former Fed Vice Chair Richard Clarida joins the program. Stick with us. This is Bloomberg.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more, but
that's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Langs.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that. Really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come. I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. Markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
I would say it is certainly possible that we would raise funds again at the September meeting if the data warranted.
I think the Fed's going to have to be, tighter for longer.
The good news we've gotten on inflation recently further emboldens the Fed to actually get to that 2% target.
This seems to have been very carefully put together so as not to send a dovish message.
I'm not exactly sure why they paused and why they hiked and what they're going to do next.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio. Alongside Lisa Abramowitz, I'm Jonathan Farrow. Your equity market on the S&P 500 positive by 0.6%. Meta in the pre-market absolutely flying once again following earnings yesterday afternoon. Looking forward to next week. This time next week, earnings from Apple, from Amazon. We need to still work through this central bank trilogy. The Federal Reserve behind us, the ECB in front of us, and the BOJ. Lisa, just around the corner. Should we deal with the Fed first? Back in the saddle with maximum optionality is Mike Gapen's take over at B of A.
It's a very nice way of saying he said nothing, and he effectively communicated no forward guidance, which is essentially what a lot of people took away from this. Some people calling it a Rorschach test. Basically, they don't know. They don't want to give you any sense of what they're going to do. People are reading this the way they want to read it, and that's how the market is basically moving this morning.
And Neil Dutta's read on this over at Renaissance Macro. This is what he had to say. The fact that he sees policy as restrictive, even as growth expectations climb, is dovish. I wonder if Neil's in the camp that Andrew Hollenhorst is in, the likes of Max Kantner of HSBC is in, Francis Donald and Manulife. Just this belief that growth's picking up again, maybe inflation will too.
And this raises a question about whether the data that we get out of the U.S. takes on increasing importance, right? I mean, at this point, this is sort of the question mark. If this is a data-dependent Fed, which data are they looking at? And how important is each data point when they say it's just one? So it's sort of this like counterintuitive circular reasoning, which is leaving people kind of questioning what they should be paying attention to.
Another read on jobless claims and U.S. GDP a little bit later this morning. We'll do that in a couple of hours' time. Let's just sit on Meta just for a beat. The stock is up by something close to 150% year to date. So going into yesterday, you felt like the bar was kind of high. The stock is up by almost 9% in early trading. Lisa, do you use Reels, this short video concept? They have shorts on YouTube as well, and you just sit there doom scrolling for like...
doom scrolling?
For hours. That's what they call it, like, you know,
well,
doom
that would be what I do.
Going through
Clearly.
video after video.
Well, doom scrolling also because that would be the tenor of the videos that I would gravitate toward, would be the ones that, you know, tell us about
the algo would pick up on it quickly,
Absolutely.
Brahma.
They always do. Do you use it?
I use shorts on YouTube. And it's just, you just sit there for ages. It just delivers more and more football content. It's just like, you know, just highly repetitive.
Again,
and it takes
this is really an algorithm.
No, it knows.
It's very tailored.
It takes me back to the 90s and Italian football, and you just keep going. Just keep going, and it appears to get better.
And mine just goes to sort of Armageddon projections. But I am wondering whether we end up seeing a consolidation and how much of this is going to come from the company formerly known as Twitter, and how much they're going to actually gain traction from that if they give some sort of sense of threads going forward. But the bottom line is advertising is really kicking up. And that is a takeaway from companies that have consumer spending that's fueling a lot of profitability. And that is some sort of bigger economic signal.
It's hard to get your head around, isn't it? I spoke to an analyst yesterday about Meta, about Facebook, and they said to me, much of the gain so far this year has been off the back of the cost-cutting exercise that started at the back end of last year. I was sitting there thinking, really? That's what this has been? And they said, you wait. We think we're going to get a re-acceleration in ad spend, and maybe you got some evidence of that overnight.
Exactly, and if they're coming off a cost base that is that much lower, it gives them perhaps a little bit more leverage. Again, though, is the cost cutting done? And we heard this from Google as well. They are still looking to pare back expenses, read office space. You hear this from other tech companies as well, even as they lean into artificial intelligence. Are we done with the broad-based white-collar cost-cutting, job cuts in the tech world that we saw earlier this year and last year?
Meta up by more than 8%. As I said a little bit earlier, this time next week, we're going to hear from Apple and hear from Amazon as well. The broader equity market on the S&P 500 futures with a little bit of a lift here. In a green on the S&P, we advanced by 0.5%. Yields are basically unchanged on a 10-year, 387.28. In the FX market, this euro has been all over the place. So I was going through the winning streak, the recent one. So that was the longest winning streak for the euro of the year so far. It was replaced by the longest losing streak of the year so far in the last week. And now the euro's back, Lisa, to about 111 going into the ECB.
And we do have that ECB rate decision that comes at 8:15 a.m. Eastern, followed by an 8:45 a.m. press conference with Christine Lagarde. Curious to see how they dovetail what you've been talking a lot about, John, which is the fact that core inflation has been sticky. It has been remaining at some of the highest levels levels ever in the Eurozone's history, at the same time that you are seeing growth slow. How they parse that as they raise rates up to 3.75% is going to be key. 8:30 a.m. we get second quarter GDP. We get durable goods orders, initial jobless claims. The expectation is we probably will see very strong growth. How do you then dovetail that into confidence that inflation is going to come down? We have seen the economic surprise index increasingly upward in the U.S. Basically good surprises, meaning the economy is doing better than people expect. How does this dovetail again into the disinflation narrative? And the earnings train continues in the busiest earnings week of the season. I'm focused on Intel. This used to be the biggest chip maker in the U.S. just a couple years ago. It's going to report earnings after the bell. Given the fact that everyone's talking about artificial intelligence, how do they catch up? How do they catch up with AMD, with NVIDIA? How do they try to get on that train at a time where they've really put their stock into personal computing, which hasn't really done that well?
No, that's been struggling for a long, long time, hasn't it? Those earnings coming up a little bit later. Let's turn to the broader market then. The S&P 500, nicely positive this morning by 0.5%. Marvin Lowe kicking off the program with us this morning, the senior global macro strategist over at State Street. Marvin, wonderful to catch up with you, sir. Lita and I were talking about what Neil Dutta has to say over at Renaissance Macro, who basically said the fact you've got a chairman of the Federal Reserve, Jay Powell, calling policy restrictive at a time that growth expectations are climbing, sounds pretty dovish to him. Does it sound dovish to you?
You know what? I think that what I got out of the meeting was that certainly the Fed wants to stop if they can. They're not really comfortable doing that at this point. I guess the takeaway that everyone's taking out of this is that every data point is real and we're going to have volatility around that. So we're going to read what we want out of it. But certainly, I think that they're encouraged by some of the trends. They're just not real comfortable, given that they've been burnt in the past, that those trends are going to continue.
Marvin, what evidence is there that policy is restrictive?
I mean, certainly on the financial side of things, and they're looking at credit. We did get a sense that there's continued tightening in credit because the FOMC did get the senior loan officer survey before we did. So that remains in the background, and the U.S. is a very much credit-driven environment, and it's taking a lot longer. The amount of liquidity and savings is making this period of contraction much longer, but that doesn't mean that it's not affecting borrowing. And this inverted yield curve, which could go on for quite a bit longer, is just another credit challenge that we have in this country.
In less than 2.5 hours, we're going to get the GDP reading, which is expected to be fairly strong. Marvin, one of the big takeaways that people aren't really emphasizing is that the Fed no longer sees recession as a base case. Have you shifted your views at all? I know you've been cautious, feeling like we are headed toward a downturn. Do you feel like the data is showing a very different story?
You know what, the data to me is confirming that just the pace of this cycle is very different than everything that we've seen before. Things are taking longer. The parts of the economy that concern us remain a concern out there. It's just taking a lot longer before we actually see that slowdown in consumer. And other than the consumer, we are seeing some of the strains that started evolving earlier this year continue.
Right now, you're looking at a situation where markets are rallying on the idea that you see better than expected earnings from the tech giants. You see a resilient consumer. You see a Fed that maybe isn't exactly dovish, but they're not particularly hawkish either. They seem to be on an uncharted path. Do you get more constructive?
You know, you do. The momentum around this risk trade, ultimately can't be denied. I do see that there's a defensive posture within some of our real money indicators. Kind of having said that, the imminence of the recession, which we've talked about it a lot, in being the longest, most anticipated ramp to a recession, continues to confound people. So you can, and there is liquidity support in a market where if kind of those recession concerns get pushed out a little further, you can continue to see that money gravitating towards risk.
So Marvin, that's the US risk backdrop. Let's talk about Europe, the ECB a little bit later on this morning. Just how difficult is the job of President Lagarde at the moment?
I think it's harder than Powell's job, to be honest with you. I believe that Lagarde would probably want to do what Powell did, but what's churning in the background is a lot more concerning than what we're seeing in the U.S. Certainly, we're debating whether or not a recession is imminent here. We've seen economies that are already fallen into technical recession in the UK, and that lending environment is is tight, both from a borrowing as well as an availability perspective.
Which reasons for some of the whipsaw action that we've seen in the euro. It makes sense given that on one hand you might see higher rates, but on the other hand, slower growth. Where do you weigh in on the bouncing around that we've seen of the euro-dollar cross, as John was talking about earlier?
Yeah, I mean, just kind of looking at what's left in terms of central bank expectations, I don't think you're going to get a lot of change on the Fed. So, we'll use that as a base case, if you will. You could argue whether or not 40% pricing for one more hike is appropriate. Until we get into the fall, it probably is. We're going to get probably a bit more movement around the BOE, around the ECB. And if anything, the pattern would be that there's less expectations for hikes. So I do think that you wind up with a stronger dollar type of environment just because of those differentials and expectations will continue to narrow around where the U.S. is.
Marvin, do you think that Christine Lagarde could get away with what Jerome Powell did yesterday, which is basically just repeat the script over and over again in different ways, not even different ways, just repeat the script?
Oh my goodness! It certainly was the art of saying nothing for about an hour yesterday. It's going to be harder for her because the headwinds are much clearer, and when you kind of look at some of the parts of the inflation discussion, they are absolutely collapsing, particularly on the consumer side of things. We've got online indicators around inflation that give us a sense that yes, the consumer is really, really struggling, but that oil story is so much more important to the Eurozone, and we've kind of seen how difficult it is when it surges. And lo and behold, we've got oil much higher than we did a quarter ago.
Marvin, we've got a big move in demand for loans in Europe. The ECB's bank lending survey clearly showing a decline in appetite for those loans. Now, Marvin, I just wonder from your perspective, is that by design for the ECB? By design, or has it gone too far too quickly?
I think it's gone too far too quickly. Their lending environment is much less robust kind of as a base case than what we wind up seeing in the U.S. So they certainly try to control it a bit more than what we see here, where there's that kind of natural demand. So when you see it fall off as aggressively as it has, it is the long and variable lags in policy, if you will, making their way and making themselves known quite quickly.
Marvin Lowe, State Street. Marvin, thank you. On the latest from the Fed, looking ahead to the ECB, the European Central Bank decision about 2 hours away. I think an accurate summary of part of our programme yesterday, an hour of Chairman Powell saying basically nothing.
Which we witnessed firsthand.
Right? Happens sometimes. I think that was the goal. That was by design for the chairman.
And a lot of people said, good job. Steve Chivarone came out and he said, finally, you say nothing. This is what we wanted from you all this time. There were no gaffes. There were no mistakes. And that seems to be the theme. Now the question is, how do we read the data? I mean, really?
I would have wrapped up that news conference earlier. 30 minutes earlier.
He was trying to.
Get out of there.
Well, I mean, there's a question as a reporter. Do you just stop asking? Or do you say, like, I know you're not going to answer this?
Well, the reporters kept going back and forth about September. And it was just like at some point, you just got to let this drop. The reporters should have left. They should have gone home.
They should have just gone on vacation.
Reconvened at Jackson Hole. It's an interesting one emerging with the ECB, and we'll talk about that through this morning. But also for the BOE. The Bank of England's a week today. And we've got these advisors to the Chancellor, this newly formed board in the last 18 months or so, last 12 months. And they're basically coming out, according to our reporting, and saying they're worried about the Bank of England going too far. You and I are going to talk about this later. What's interesting about this is that some of the advisors to the Chancellor are former BOE officials, including the former chief economist Andy Haldane. So it's interesting that they're saying hit pause at a time the BOE is set to do anything but next week.
Especially because they were in charge of getting to where it was now. Right. So it's a little bit rich. I imagine some people on the board are thinking the same.
It's pretty interesting stuff, intriguing. Do you really want the advisors to the Chancellor weighing in the way that they might be at the moment?
Robust discussion.
That's the dissent. That's where you can find dissent
exactly.
Right now. Okay. Equity futures on the S&P positive from New York. Good morning. City.
In London, in Sydney,
From Washington.
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
The ECB is expected to hike rates, but how high will rates need to go, and how fast will they get there?
The ECB is still catching up.
They want to hike and show strength when they actually should show caution.
Bloomberg Television and Radio brings you the breaking news from Frankfurt and detailed analysis after ECB President Christine Lagarde's press conference.
Are we at the end game for the ECB?
Most questions will persist up until Lagarde goes on that podium.
Coverage begins today on Bloomberg, your global business authority.
The staff now has a noticeable slowdown in growth starting later this year in the forecast, but given the resilience of the economy recently, they are no longer forecasting a recession. We'd be comfortable cutting rates when we're comfortable cutting rates, and that won't be this year, I don't think. It's really a question of how do you balance the two risks, the risk of doing too much or doing too little. I would say it is certainly possible that we would raise funds again at the September meeting if the data warranted, and I would also say it's possible that we would choose to hold steady at that meeting.
The art of saying something but saying absolutely nothing at the same time. Chairman Powell, the Federal Reserve Chair, in the news conference following a 25 basis point rate hike from the FOMC yesterday. The reviews are in for our Federal Reserve special, this from a Bloomberg subscriber. Were you watching F1 videos and football highlights during the Fed meeting? It sounded like it. That's from a Bloomberg subscriber just months ago.
Well,
I mean, somewhat accurate.
So I was about to say, I guess everyone had their own poison to keep them awake during that. I mean, I will just say, it was the unanimous read from the meeting, which is that this was, as we heard from one commentator, the least informative Fed meeting we've heard since at least 2011, if not, or 2022, if not earlier than that. So we've looked at a meeting by meeting giving of some sort of forward guidance, and suddenly that evaporated.
And by the way, the fact that I may or may not have been doing that is a compliment to the chairman, who clearly wanted to make that news conference boring, and he was successful.
That's brilliant, John.
Okay.
Seriously? This is it's a compliment to you.
It's a compliment to me and to the Fed chair, okay? The Federal Reserve decision behind us, the ECB just in front of us. Going into it, here are the scores on the S&P 500. Futures positive by 0.5% on the S&P. Yields just about unchanged as you wake up this morning. Your 10-year, 3.8689. In the FX market, the euro stronger against a weaker dollar. 111.50. We have to turn to Washington, D.C., and not for the news conference from Chairman Powell, but for a press briefing from Senator Mitch McConnell. Really worrying stuff yesterday, Lisa, for the aging senator, who appeared to just abruptly freeze while speaking and stand in place for the best part of 20 seconds in a news conference on Capitol Hill.
He tried to joke about it afterwards, saying he was sandbagged and sort of joking about the lapses. But there's been a very serious concern in Washington, D.C. about his role, especially since he was removed and he was off duty since March. He had a concussion at one point. He's fallen a couple times. But it raises a bigger issue. If we're talking about the age of our elected officials so greatly to ask about whether they are fit to serve, what does that mean in terms of the political cycle and the average age of the elected officials of this nation?
It's a pretty humorous response, because when he said that he'd been sandbagged, he said that that's what he told the president. Of course, the president tripped over on the sandbag, do you remember? And he said that he was sandbagged. But I'm with you. This is really serious stuff. I think the average age of the Senate at the moment is in the mid-60s, something like that. There are some people that have approached 90. I think Dianne Feinstein is 90 now. There are some big concerns around that individual and others too. And this really shapes the conversation a little bit more around the presidential campaign going into next year.
And Senator Mitch McConnell is the longest serving leader This is one of the
4
issues.
decades.
Exactly. And he's been, really consolidating his power. Now we have a president who's around the same age. He's just a year younger than Mitch McConnell. And it's a really delicate issue because that shouldn't necessarily disqualify someone. And yet it has been in the news. And you have raised the question, when do people start talking about it more seriously, more consistently from the Democratic Party side to decide who's going to step in at that point?
Well, I think the press has a role to play in that as well. And you know how the press works in the United States. There's a fear of talking about this. It becomes partisan really, really quickly. But I don't think this has to be partisan politics. You can see this playing out on both sides of the aisle. We saw it happen with the Republican yesterday. And we need to be open and honest about what we see on a screen. When you see an elected official speaking and struggling to get their words out, that's a conversation we need to have. But I think we need to be somewhat careful about putting everyone in the same bucket, that once you get into the 80s, you're done. We know some really sharp people in their 80s. You've talked about your father who's still playing tennis in Central Park. And for anyone that doesn't know, Bramo's dad, still absolutely crushing it. But Lisa, look at Bernie Sanders. He's still pretty sharp.
Yeah.
Chuck Grassley through much of his 80s, pretty sharp. Not everyone is at that same moment when they get to 80 that we have to say, well, they shouldn't be in office anymore. But some more than others, it's obvious they are struggling. And we need to have an open and transparent conversation about it.
Brilliantly said. I couldn't agree more. And it's something that people have to be able to vocalize without being called out as partisan hacks.
John Lever joins us now, Managing Director of the United States at Eurasia Group. John, if you don't mind, I'd love to start there. Some worrying images on Capitol Hill yesterday. It's not the first time we've seen that kind of thing. John, I just wondered what you were thinking yesterday afternoon.
Yeah, I mean, my wishes are for the senator's best health. I'm grateful for the opportunity that he gave me when I worked for him, and I think he's been a terrific leader for the Republicans in the Senate. But it's hard to watch. I mean, it really was a challenging moment for everybody who's got any affection for Mitch McConnell and anybody that thinks about, the future of this country and its leadership. And you're absolutely right. We do have a lot of folks. Americans are living longer than ever. They're sharper. Their mental acuity is better, longer than it has ever been before. A lot of them are staying in office as a result of that. And as you said, many of them are doing great. You mentioned Chuck Grassley. Richard Shelby was an older senator who retired last year. But then along with that, you also have folks like Dianne Feinstein, who is clearly struggling to, has been clearly struggling to do the job that she's meant to do. And then there's instances like people like Ruth Bader Ginsburg, who stayed in office probably a little bit too long in the Supreme Court, and it cost the Democrats a Supreme Court seat that they're going to pay the price for a very long time. So there's really no way to force folks like this out of office. We don't have term limits here, and it absolutely is going to be an issue in the presidential election, particularly if we have two of the oldest people ever to run for the office competing on both the Democrat and the Republican side next year in Donald Trump and Joe Biden.
John really framed it wonderfully because it isn't just a partisan issue. It's on both sides. And this isn't a matter of just age. It's also condition and being having an honest discussion around it. How much of the average age, though, has alienated younger voters and created many more of them, caused many more of them to vote as independent and not necessarily follow along on the same kind of traditional party lines?
I would say we haven't really seen that phenomenon. I mean, the important thing to keep in mind here is that these are all elected officials who are winning. So voters are telling us that they're actually quite comfortable with the average age of American elected officials going up. If you look at heads of state globally, actually, that's gone down. The average age has gone down worldwide, but in the U.S., it's gone up recently with a few outliers like Barack Obama, who were relatively younger. And, look, we had record turnout in 2020 for the two of the oldest candidates in American history. And we're probably going to have record turnout again in 2024 with both candidates, bringing out the base on both sides. So the voters aren't telling us yet that age is a problem relative to what they seem to value in name recognition and experience.
John, the campaigning really picks up next month. Is the first debates for the Republicans going into the primaries, hosted by Fox, the back end of August. There's still a question mark about former President Trump's participation in that, John. I just wonder your thoughts in a moment on his standing and whether he turns up 4 weeks from now.
I think it's going to be hard for Trump to turn down the opportunity to do what he does best, which is push people around on the debate stage. And I think that the debates in 2016 are really where he distinguished himself from the field. He doesn't need to do that this time around. He's got a very commanding lead in the polls. He's got universal name recognition. And even if he's not there, the subject of the Republican debates is probably going to be him and his policies and how the other Republicans try to differentiate themselves from him. So I'm not really sure it matters for his campaign whether or not he shows up. It is the best opportunity for those other Republicans to try to differentiate themselves from him and take him down a notch, something that none of them have been able to do. But former Governor Chris Christie from New Jersey has said is his explicit goal. So the debates are going to be massively entertaining. I hope he shows up because I'm definitely going to watch if he's there. And it probably is going to be a little bit less interesting without him. But I don't think he needs it in order to stay on top of the Republican field until Iowa.
I think most people feel the same. They hope he shows up, but ultimately think that he won't. John, wonderful. It is great TV. I agree with you. John Lieber there of your Razor Group. John, let's catch up again soon, and thank you for your thoughts on Mitch McConnell, and we wish the Senator the best. From New York City this morning, good morning to you all. Equities are just about positive on the S&P, up nicely. Janet Henry of HSBC coming up.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
Right.
so it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority.
Approaching the ECB decision, An hour or so away after the Federal Reserve, your market looks like this on the S&P 500. Snapped a 3-day winning streak on the S&P yesterday, going absolutely nowhere at the close, slightly negative. On the S&P this morning, positive by 0.6%. Big lift for the Nasdaq, up by 1.2% on the Nasdaq 100. Meta in the pre-market higher by almost 9%, adding some weight to a monster rally so far in 2023. This time next week, on the Nasdaq 100, 17% of the index across two names, Apple and Amazon, after the close next Thursday. Look out for that. In the bond market, 2-year, 10-year, 30-year, shaping up as follows. Your 2-year yield down by a couple of basis points, 482.67. I have to admit, Lisa, you can create your own narrative following Chairman Powell yesterday, but 2 years not done much at all, has it?
People basically saying that he kept the status quo by saying absolutely nothing. It seems like there is a view maybe on the margins this was hawkish because the Fed did remove their projection for recession. But otherwise, they're meeting to meeting. They're data dependent with an unclear version of which data they're looking at. A lot of people saying that was the last rate hike.
I'm with Neil Dutta over at